Uh, Good morning, everyone. Thank you for joining us today. My name is Olivia Kabatabazi. I'll be the moderator for this session. We have a very rich program lineup with experts from the insurance industry today. We're looking forward to having an engaging session. So one of the topics for today, we have highlights of the key developments in the insurance industry, insurance trends that present the greatest opportunities for lawyers. Then we shall also talk about AI relevance and impact of the insurance industry. And we shall also have a presentation on reshaping insurance dispute resolutions in a changing world, with a focus on decisions coming out of the Insurance Appeals Tribunal. Our speakers are from the industry. We shall have three speakers, three presentations, and one additional one on the key developments from the Director Legal. You can let us know in the comments in the meantime about your expectations, and if you have any other insurance questions that are not necessarily on the topics to be discussed, you can put them in the comments. Just to give you a brief background on the speakers that we have today, we have Mr. Nicholas Lutakome. He is the CEO of CIC General, an insurance company. He's a seasoned insurance executive with a strong track record in business transformation and growth. Mr. Lutakome has over 18 years of experience in insurance practice, and he possesses extensive knowledge in life, non-life, and medical insurance. So he'll be the one speaking on AI relevance and impact of the insurance industry on the insurance industry. We shall also have Ms. Magezi Gerin, the Legal Officer Regulation, Drafting and Compliance at IRA. Ms. Magezi has been in charge of policy, legal advice. She creates regulatory frameworks, so she'll be telling us the trends and opportunities for lawyers. We shall also have Ms. Namachika Rita, who is the chairperson of the Insurance Appeals Tribunal, to give us an understanding of how the Appeals Tribunal works. We request for your patience. We shall be starting in the next 10 minutes. So we give us a few minutes and we shall start. Please stay on, and we apologize for the delay. Okay. We are ready to start now. Thank you for your patience. To officially kick off our program, it's my honor to invite our very first speaker to deliver her opening remarks. Our speaker is Mrs. Francesca Kakoza. She's the Director Legal at the Authority. She'll be highlighting key developments in the insurance industry. Allow me to welcome Mrs. Francesca Kakoza.
Good morning. Good morning, our audience, council, and everyone that has joined us this morning. Thank you so much for signing in. We are very happy to be here as the Insurance Regulatory Authority to bring to you training and continuous development in insurance. We have a lot on our agenda, like Olivia has, I'm sure, has already said. And please stick here. We're going to have very interesting discussions and conversations with you as we aim to develop the insurance industry and also create awareness on insurance. Like Olivia has said, my name is Francesca Kakoza, and I'm the Director Legal and Secretary to the Authority, the Insurance Regulatory Authority. This morning, I'm here to speak to you about key developments in the insurance sector for 2025 to set the context really for the discussion that we're going to have this morning. And as more presenters come on, this will be able to show you or to provide that blueprint for you to appreciate the developments in insurance and where we are going as a sector. So just allow me to share my presentation and then we can kick this off. Okay, so we'll begin with a global view, and we shall move into emerging trends and risks. Then we shall zoom into Africa's position, and finally Uganda's performance using both quantitative and qualitative developments to show you how our sector is evolving. Once again, this is to set the context for the discussion this morning and to enable you appreciate the developments that we have in the insurance industry, even as you provide legal advisory for the sector and as you transact as well as do your business in the insurance sector. Okay, so that's the next slide will just show you the structure of this presentation. By the way, one of the key developments in the insurance sector is technology, so I'm not certain why my slides are not moving as quickly, but we shall be able to catch up. So like I've said, we're going to talk about the global and regional market overview, look at emerging risks and industry shifts in the insurance industry, look at technology and innovation, regulatory and governance developments. Then we will come down to Africa's insurance outlook, look at what is happening in Africa, and then finally zero down onto Uganda's market performance and developments. And finally, we shall look at the challenges and future outlook of insurance in globally, but also for Uganda. Okay, so like you may have noticed, globally 2025 has been a steady year. GDP growth stands at 2.8%, and this we are getting from the Swiss Re report. And the GDP growth at 2.8% is supported by, of course, the steady growth in the US, as well as a recovery in Asia Pacific. As you may have noticed during COVID, there was a lot of poor economic performance, but we have seen the economy globally recover over the years. From 2021 to now, we've seen steady growth in terms of GDP, and right now we are at 2.8%. The good thing with the global economy, again, is that inflation is moderating at 3.1%, which for us is helping insurers to stabilize in terms of investment returns. As you may know, inflation affects investment returns for not just the insurance industry, but for everyone, every business person. So it's helping us stabilize investment returns in the insurance sector. Now, in terms of the specific growth drivers, digital transformation has been a critical driver for growth in the insurance sector, as more insurance companies take on digitization and automation of their processes, including customer service as well as underwriting. We are seeing more policies being underwritten because of the quickness in the service that's being given. But also in terms of claims management, we are seeing quicker claims timelines because of digitization. And of course, the stable interest rates have also helped in terms of investment for the insurance sector. Now, every good story doesn't survive without some bad things. And of course, we've had headwinds as well. Globally, you may have heard of the floods in Turkey, you may have heard of the catastrophes in the US, the fires, etc. Now, when all these catastrophes happen, the insurance sector is heavily affected because we are paying claims. Remember, we have different policies, fire policies, we have business policies, business recovery policies, property policies, etc. Many policies. So when catastrophes occur, when floods occur, of course, we have to pay out in terms of claims because these people have taken out claims. And claims payment affects the insurance industry. It is a good thing for us, and we are pushing for it, and we must do it. But paying of claims, of course, affects profitability. So that's one of the headwinds or the downsides that we've had in the industry. Of course, there's also geopolitical risks in Eastern Europe and Middle East, which have been with us for so long. Israel, Russia, Ukraine, and all those countries that have geopolitical tensions and wars. That is also affecting insurance profitability globally, again, because of payouts. The claims that are paid out, but also, of course, no business can survive in geopolitical tensions or wars and catastrophes. So that is affecting us a lot, and but we are still hopeful. We have a very positive outlook in relation to our industry. So that's a global and regional market overview. I'll move very quickly to emerging risks and industry shifts. Now, globally, climate change has been a critical issue and remains one of the biggest risk drivers for the insurance industry because of the catastrophes we've talked about. Remember, we've talked about floods, we've talked about fires, we've talked about drought, and all those catastrophes. Anything related to climate change is actually very heavily affecting the risk landscape and, of course, increasing the risk profile for the insurance industry. Now, the other one is geopolitical instability. We've spoken about that. Risk reporting and underwriting caution has increased again because of geopolitical instability. Like we've said, when something happens in terms of wars, in terms of political instability, there are risks that are created by that. And of course, our insurance policies suffer because then claims increase. So geopolitical instability has affected our industry a lot and has also led to repricing of risk. A property risk that probably used to be very low at some point, when war gets in there, when political tensions get in there, those properties are at a risk of being destroyed or at a risk of being ignored, so that wear and tear takes over if it's not excluded in a policy, etc. So all those things raise the risk profile of the different risks that we are underwriting at our level, and of course now lead to repricing of that risk, and also increase in underwriting caution. What we mean by underwriting caution is that as an insurer underwrites any risk you bring to them, they are more cautious about the risk they are taking on, the kind of risk they are taking on, and also their risk appetite also goes lower because they don't want to incur losses thereafter. So geopolitical instability is a critical emerging risk. Not emerging risk, it's a risk that's already with us, but of course a growing and increasing risk as more countries go into war, but also as political tensions increase. The other one is cyber and AI risks. Now, this one is already with us, even not just the insurance industry, but most industries are suffering from cyber risks. You've heard of companies like Google, companies like Uber actually suffering from cyber attacks and losing a lot of money, especially when those cyber attacks include release of data that is supposed to be personal data. I'm sure you've heard of the different legal regimes on personal data in Europe, in the US, as well as in Africa. There are different legislations that have been enacted on protection of personal data. The GDPR in the UK is one of the key ones on protection of personal data. So once that is violated, companies are being forced to pay a lot of money in compensation, but also in penalty fees. So cyber risk is another one that is affecting us a lot, as well as AI risks and use of AI. So us as supervisors, as IRA, we are increasing our scrutiny on data integrity and data protection. And of course, what that means is that the compliance expectations and requirements downstairs in the insurance companies, but also in the insurance sector globally increase. So cyber and AI risks are some of the key things that are also coming up. Of course, the other one is autonomous and EV liability. What that means, these are electrical vehicles, and of course technology in those developments has opened up a lot of complex liability questions. For example, who bears responsibility in accidents involving automation? When we have our cars that are not driven by anyone, who bears a responsibility when those cars actually face accidents or knock someone or cause damage and whatnot? Who bears liability? So those are key questions that are also emerging globally that we need to look at. Now, locally, as these emerging risks come up, Uganda is also not, we are not seated. We are looking at how we improve our regulatory framework to ensure that we actually take care of these emerging risks. So locally, Uganda's insurers are also being pushed to enhance risk and actuarial expertise. And this is a gap, of course, that we have in the industry, not necessarily for the normal risks, but for the emerging risks. There is need for risk and actuarial expertise so that our insurers are able to underwrite these risks effectively and also manage their risk profiles as they take on more and more risks, more of these emerging risks. So as IRA, that is one of the gaps that we're looking at, risk and actuarial expertise, and we are already coming up with initiatives to actually increase this expertise in our industry. So that is emerging risks and industry shifts locally, but also globally. Now, next we'll look at technology and innovation, which is a key development. Remember, the discussion we are having this morning is on key developments in the insurance sector. So we've seen the emerging risks, and now we're going to go to technology and innovation and how it's affecting our insurance profile. Now, the insurance value chain in its nature is very data-driven, but now more so than ever before, our industry is data-driven in the way we underwrite risks, in the way we take on customers, in the way we do claims management, it's heavily data driven. Of course, AI is enabling risk-based underwriting and early fraud detection because of its ability to look at big data, synthesize it, and give information so that we are able to make decisions. So AI is a very critical player in technology and innovation in the insurance industry. The other one is blockchain, which is being piloted globally to curb fraud and speed up claims settlement. I know that the ULS has held a discussion previously on blockchain, so I won't go into it, but we as lawyers need to educate ourselves on blockchain and what it means for our industry. For us already, we're being told where we used to draft contracts and be able to put the difficult clauses, etc., that might not now be viable anymore because blockchain technology can do all those things, including AI. So these are things that we need to take care of. So blockchain and the Internet of Things are enabling transparency and usage-based insurance. That is another key development. Now, the other one, the third one, is InsurTech growth. And InsurTech is really insurance technology. We are embedding InsurTech in the way we do things, in the way we do customer service, in the way we deliver or bring our services to the market, in the way we do claims management. So we are already partnering with technology companies to deliver insurance services and insurance products very quickly to the industry. So once again, that's an area of growth for the insurance sector. And as lawyers, again, that's an opportunity. And the next presenter will talk about opportunities in the insurance sector for lawyers. But this is a critical one for you to take care of because insurance companies are increasingly partnering with technology companies to deliver insurance. Just like we have fintechs the other side in the banks, here we have insurtechs. So the other one, for us as IRA, we are also not seated, even as we see this technology and innovation happening globally, we are also leading supervisory innovation through digitalization of our risk-based supervision. So we are, as you know, mandated to supervise insurance companies and ensure that they remain stable, but also make profits and make business, which at the end of the day contributes to our GDP in the country. So one of the things that we are putting in place is risk-based supervision software that is going to help us to get real-time information on what is happening in the industry. So it will enhance our ability to get real-time data in terms of information from the insurance sector and also enable us make quick supervisory decisions. So this is already in advanced stages and it's going to be launched very soon. So again, we are not being left behind and we are moving ahead to do this. Now, on the distribution side of insurance, there's a lot that is happening there as well. We have now bancassurance and mobile channels to deliver insurance. You may have heard of partnerships with mobile companies, MTN, Airtel, where they're delivering insurance real time. As you buy airtime, you're getting insurance on the side. As you buy your data, you're getting insurance on the side. So that is one of the ways we are also using to deliver insurance real time to our clients. But also in terms of bancassurance, even before, from years back, you can get insurance at your local bank. Or I think we have between 25 to 30 banks in the country. Almost 80 or 90% of those have already taken on bancassurance and are acting as agents for insurance companies. So the next time you go to do your banking, to withdraw that money, ask your banker about insurance and what products you can actually use to protect yourself against risk. So technology and innovation has taken us that far, and we are moving even further to improve our industry. So that's a key development. Now, in terms of regulatory and governance developments, very quickly, we have seen an evolving regulatory environment in relation to the insurance sector. And this environment is evolving to reflect sustainability and governance imperatives. Globally, you may have heard of the new IFRS sustainability standards, Standard 1 and Standard 2. Again, we need to educate ourselves about these standards and their provisions. One is on climate change, two is on sustainability standards, and what companies are going to be expected to disclose in terms of required disclosures, but also internal policies on sustainability and climate change. So the insurance sector has not been a bystander. We are also affected by these standards, and as you may have noticed from our ACT, international best practice is one of the key imperatives for us as the insurance sector. So IFRS S1 and S2 are out now and are transforming how insurers report and manage climate and social risk exposures. Now, in Africa, regulators, including Uganda, are embedding ESG risk analysis heavily into supervision and governance frameworks. Us as IRA have already started our ESG journey, and very soon, possibly by Q3 of this financial year, we will have our ESG regulations out. That is, all things remaining constant, we'll have our regulations out. And so it is very critical that as you advise your clients in the insurance sector, you actually begin to also educate yourselves about ESG and required ESG disclosures so that you add that value to your clients as you advise them. But also for some of you that own insurance companies or are brokers or are players in the insurance industry, this is something that's coming out of our space as a regulator, and you need to be able to get on board. Now, the other one is AI regulation. Already, as you may have noticed, AI is a big driver on the positive side, but also on the negative side in terms of cyber risk, but also ethical issues related to use of AI. So our industry as well is one that is being affected in terms of AI regulation. AI regulations have come out regionally in the other East African countries. We already have AI regulations that have been enacted. Uganda has not been left behind. Very soon from the supervisory space, we are coming up with cyber and AI regulations that we are going to issue to the insurance industry that will then regulate how AI is used, and of course the ethical issues and data integrity related to AI. So that is something that you need to also educate yourselves about, but also beware of as you advise your clients. Now, of course, the FTA, that is another topic that has been already discussed in terms of harmonization of regulations and the legislative framework across Africa to enable business, but also to enable that Africa free continental trade space. So that is something that is already with us and is already taking traction. But also we are looking at the other element that's under consideration is license passporting. In other words, that if a company is licensed in Uganda, they can be able to rely on that license and do business across Africa without necessarily needing to be licensed by Nigeria, be licensed by Egypt, etc. So that is something that's under consideration already, and there are various developments that have happened in terms of license passporting. So would like to invite you and to encourage you to also look at that space in terms of advising insurers in the sector, but also even as you prepare yourselves to do cross-border advisory and of course continental advisory across Africa. That means we need to educate ourselves about the laws that govern insurance in Egypt, in Algeria, in Morocco, wherever. We need to know at least we need to have the bigger perspective or the bigger view of these laws as we advise insurers, but also our clients elsewhere. Consumer protection is another key area of regulation and governance for us as a regulator, but also globally and regionally. There are various consumer protection laws that have been enacted, both on the global the global space, but also regionally. And in Uganda, we are soon coming out with our consumer protection regulations for the insurance sector. But as you may have noted already, the banking sector already has consumer protection guidelines, so does capital markets. So we need to be looking at consumer protection and educating ourselves about what it entails, what rights and obligations are there for our clients, and also how we can protect them via consumer protection. Now, local milestones, we've already spoken about ESG guidelines, and of course, locally also, we've adopted the King IV Code as IRA. That's not for the industry, but very soon we'll also be asking the industry to enhance their governance framework and, of course, how they show up in terms of corporate governance and best practices and adopting best practices. I'll move very quickly to Africa's insurance outlook. Remember, we said we are going to talk global, Africa, and then Uganda as we talk about the key developments. Olivia, I don't know how much time I have. How much have we used? Okay, we're trying to manage your time here so that I don't speak on up to the end. Okay, so I'm told I have 15 minutes. Let me try to speed this up. So Africa's insurance outlook. Now, you may have noted that, as you may have noted from the global perspective, the insurance sector is developing despite the headwinds that we've seen, the geopolitical tensions and risks, as well as climate risks and many other imperatives that are driving risk. We are still developing. In Africa, Africa's gross written premiums have reached USD 92 billion in 2025. That is that's a 6% growth year on year from 2024. Now, once again, you may look at 92 billion and think it's a lot. It's actually little money compared to the global perspective. I think Africa's industry should be occupying probably between 5 to 10% of the global gross written premiums. So our industry is still small. That said, it signals opportunities in the insurance sector, that there's still so much more that we can do in terms of taking up insurance policies, but also growing the insurance business in Uganda, but also Africa. So again, someone else will talk about the opportunities, but this is an opportunity for us to tap into as lawyers, but also as business people. So Africa's premium growth, 6% year on year. Then, of course, there's been other changes in the insurance space in Africa, including the focus now on digital inclusion. And the focus is on mobile-enabled insurance. As you know, mobile networks and almost everyone in Uganda and Africa, anyone of contracting age has a mobile phone. So where we as insurers do not reach, the mobile phone is there. And so there has been focus on digital inclusion as well as inclusive insurance to focus on mobile-enabled insurance so that that person in, let me just mention Nakapiripirit because it's one of the ones I know is far, can actually get insurance products via their mobile phones and can have that safety net in terms of risk, where risk actually actualizes. So digital inclusion is a key focus in Africa. Then the growth drivers for insurance have been health and non-life insurance. Now, health insurance saw its numbers go up, especially after COVID. Many people recognized the importance of health insurance and started taking up insurance policies because they recognized that we are mortal human beings and anything can happen. And so you need to secure your life and the life of your loved ones. So health insurance policies have gone up globally also, but most especially in Africa, because before that focus on health was not, health insurance was not seen as a priority. But after COVID, after that life-threatening aspect, most people took up health. Now, non-life has traditionally been growing, and so it continues to be a growth driver as more and more policies are being underwritten in terms of non-life insurance. Agriculture and parametric insurance have also gone up. As you may know, or you know already, Africa's economies depend heavily on agriculture. So that being our backbone, there are lots of risks that can affect the value that we get from agriculture. And so there's been focus regionally and even here in Uganda on agriculture insurance. Now, parametric insurance is insurance that pays out on happening of a trigger event. It's a complex kind of insurance, but it's a data-based and quantitative-based insurance where there are certain triggers that are preset at onset of the insurance policy, and when those triggers happen or when those metrics happen, then that insurance is paid out. For example, we can have in a particular contract where you're saying that I expect this kind of yield from my garden. Now, if that kind of yield is not realized because of various reasons, for example, a certain level of drought, then the insurance will pay out. So that is parametric insurance. Now, this has seen a lot of growth where public and private partnerships are concerned, again, because we have development partners coming in to put money in this kind of insurance to buffer African economies, but also to buffer agriculture so that agriculture actually continues to be done, given that it's a backbone for most of our economies. So agriculture and parametric insurance are a key development in Africa, and is something that you need to educate yourselves about as well as lawyers so that you're able to advise effectively. We've talked about ESG and sustainable finance, and lastly, policy alignment, where the AFCTA is coming up very prominently. And we've talked about license passporting as well as harmonization of regulations and laws across Africa. Now, as I move towards the end of this presentation in terms of key developments, I just wanted to give you a snapshot of Uganda's insurance. As you can see, we are also growing as a sector. H1 is Q1. In terms of total gross written premiums, we've grown at 8.7%, up from same Q1 of 24-25. Where we moved from 933 billion to now 1 trillion. So as you go down, you can see that heavy growth in all the key performances that are reflected there. In terms of life, non-life, HMOs, microinsurance, we are growing. And as you can see, you note that up there in Africa, we said microinsurance and inclusive insurance and digital enabled insurance are growing very heavily because of that focus on providing a safety net for everyone in terms of insurance. You can see that Africa growth reflected up there has also linked into what is happening in Uganda, and we are seeing microinsurance actually as a key growth driver of what we are realizing as gross written premium in the insurance sector in Uganda. As you can see, in Q1, microinsurance grew at 243%. Now, that is a humongous growth, which you're not seeing in the other segments of the insurance sector. So that means there's a renewed focus on microinsurance, and as lawyers, that is an opportunity for us to advise, because we're going to see more companies coming into the microinsurance sector, but also most of your clients actually taking up microinsurance. Now, very quickly, in terms of claims paid, you can see the insurance sector is actually paying its claims. So we are delivering on that insurance promise. We are taking your premiums and covering you against the risks that you have in terms of your life and livelihood. So our claims stood at 43.6%. That means for every shilling that you give us, we are giving you 43.6% of that. So we are paying you back when you actually face those risks. Okay, so market structure and dynamics, I won't go into that. We've already reflected that in terms of our growth. And now let me move to another critical key development in the sector. Just to inform you, IRA is now ISO certified. That means in the way we deliver our services, in also the way the insurance sector is going to deliver its services, is going to be much more improved from where we were. If we've been serving you well, now you're going to see better service in terms of customer service in your customer journey, but also claims payments. So we are ISO certified, and that is also going to flow into the industry. We've spoken about the Complaints Bureau before. We've asked you and informed you as lawyers that we have a Complaints Bureau at IRA. If you have any insurance-related complaints, bring those complaints to us. And as you can see here, that is a key development for us. There is a lot of claims that we've resolved, complaints that we've resolved, and we continue to resolve those complaints. I already talked about ESG and the regulations that are coming out in that space. Finally, in terms of industry outlook, we've been talking about developments. We've been talking about regulations that we are bringing out. We've talked about the consumer protection regulations, ESG regulations, cyber and AI regulations. We've spoken about reviews of the licensing and governance regulations to enhance corporate governance in terms of what we expect from the insurers. We've spoken about changes in capital adequacy regulations, capital adequacy and prudential regulations. Those were actually out. You've seen those changes, which are meant to align those regulations to IFRS. You've seen all those. Now we finally go to the industry outlook. Where do we want to go as an industry, and which will now trigger the developments that you're going to see at our next presentation. Now, in terms of, we've seen a positive trajectory in terms of gross written premium and where we are going, but also look at deeper inclusion. That is a focus area for us as a regulator, but also as a sector. Microinsurance is going to be at the center stage of how we do insurance and how we deliver insurance. So again, that is something we are focusing on. Technological adoption, that is another key focus for us. And so you're going to see a lot of technology developments and use of technology-based customer service, as well as platforms to deliver insurance. We've talked about digital distribution, which has increased, and of course, supervisory oversight, focusing on capital adequacy for our players, focusing on data protection, consumer protection, and ESG risk oversight. Okay. Strategic priorities, which is my last slide, is really, again, where we are focusing as IRA and where the developments are going to come from in future. So we've talked about deeper market inclusion, which is focusing on scaling microinsurance and mobile platforms. The other one is accelerating digital supervision. So once again, like I've spoken about, risk-based supervision is something that we are already launching and will be in the industry very soon. And that is what we are going to expect is we are going to be able to get information from the industry and be able to make regulatory decisions. So where we've been waiting for quarterly returns to know what's happening in a certain insurance company, now insurance companies will be linked into this software so that we are able to pick up the key risks happening in the industry and make regulatory decisions accordingly. We've spoken about advanced ESG and governance, strengthening capital adequacy, and lastly, enhancing consumer trust. And this will be through efficient claims, fair conduct, and education. So, ladies and gentlemen, as I conclude, like we've said, there's a lot of key developments in the insurance sector. It's a very dynamic and robust sector because we follow the risk. Where risk is going, we also follow so that we insure you, we insure the public and globally against global risks that are coming up. So any global risk that you see coming up, you need to be able to then inform yourselves much more about it, because that's where insurance is moving and that's where the policies are going. So I would like to encourage you as lawyers, take charge of the opportunities, but also the insurance education available in this symposium and also globally. Thank you so much for listening to me. I hope I've set the context for where we're going in this symposium. And I would like to encourage you to stay on board. There's a lot more planned for you this morning. Thank you, and we'll take questions or comments. I hand back to Olivia.
Thank you very much, Director Ligo. Thank you for that insightful presentation. Director Ligo, could you briefly give a deeper explanation on ESG? Director Ligo is a seasoned lawyer in cross-border practice and governance, so should be the best person to really give a deeper understanding on ESG and why it's very central in the insurance industry and what lawyers exactly can pick from the ESG trend.
Thank you. Thank you so much, Olivia, for that. Now, ESG, as we already know, is environmental, social, and governance. And as you may have noticed, again, in terms of environment, we've spoken about climate change, and you've seen the climate change that is happening. By the way, that is not a myth. It is actually with us. You've seen the droughts here in our own country. You've seen the mudslides in our own country, and really, even just across this year, when the rains were supposed to come in, I think we are used to having them in August, September, etc. It's one of the longest seasons if you're a farmer. We are now having intermittent rains, so you're not sure whether to plant at this time or to do something in the agriculture sector. So climate change is already with us. Now, anything, like I've said, insurance follows risk. We are a risk-based sector. We follow risk, and we go in there to cover you against those against risk events. So climate change has caused a lot of catastrophes. We are still lucky in Uganda that we've not gotten those catastrophic floods, although it has happened. I mean, we've lost people also when the heavy rains come. But out there, floods can destroy property, destroy human lives, disrupt industries, disrupt economies. And so as the insurance sector, we are very concerned about that, because those are the kind of risks actually that we underwrite, that we protect you against. Once those risks happen, we come in to give you that financial cushion so that you don't have to spend money to actually pay out to put yourself back in the position you are in earlier. So environment and environmental factors are very critical for us. So as we do our underwriting, we're actually taking care of that particular risk, the environmental risks. How will they affect the risk profile that we are taking on? And also we are looking at environmental risks. Which environmental risks can we actually cover you against? That is why we are heavily moving into agriculture insurance, because agriculture is one of the most affected sectors by climate change and environment. Now, as you may know also, the risks don't stop there. Once agriculture is affected, of course, the livelihoods of our people are also affected. The health of our people are also affected, and insurance also goes in there. So environment and the environmental factor in ESG is actually very critical for us. Now, it is not just in doing business that environment is important for us. We as individuals, as insurance companies, are also susceptible to environmental risks. anything that happens here in Uganda can affect me in terms of climate change. Floods affect me as a human being, but also even as an insurance company, they affect you in terms of your employees. They can disrupt the way business is done, and they can actually affect our livelihoods as individuals, but also as companies. So we are making it very an imperative for insurance companies to actually have those environmental policies to govern the way they do business, but also to underwrite environmental risks so that they are able to give you that cushion as the public in terms of environment. Now, that is environment. The social factor in ESG touches, really, it is social. It will touch the people that are affected by the business that we do, by the services that we deliver, by the products we deliver. So that is the communities around us. That includes the employees around us. That includes our supply chains, the people we are sourcing our products from, our raw materials from. All of those are touched by the social factor. Now, as you may know, our employees are critical. They are the most critical asset to insurance companies, but also to any business. If anything affects them, then you're going to suffer as a business. So the social aspect takes care of how you deal with your employees. How are you treating them? Do you have fair employment policies? Do you treat your employees very well? Do you have occupational health and safety mechanisms worked into the way you do business so that your employees are protected or anyone accessing your facilities is protected? Now, how about the communities that you serve? Are you socially investing in those communities to ensure that you're giving back to society, but also it is something that also improves your reputation and also builds brand trust for your brand, whether you're an insurance company or a business? Social factors are very critical for us to take care of and also manage. Governance, that one I don't even need to highlight, because as you know, good corporate governance is good for business. If our insurance companies are not operating in alignment with best practice in corporate governance, your sustainability is questionable. That's not just for insurance companies, but for also any other business. And governance is all about how institutions are directed and controlled. So that is ESG in a nutshell. And those are the regulations that we are coming up with to ensure that our industry is well regulated. But that is not just for us. Most of our insurance companies actually have a global footprint. So it is already out there. ESG is an imperative. It is not something we can run away from, because it is good for business, and we must be able to implement ESG in the way we do business. Even in your law firms, by the way, please implement ESG. Thank you, Olivia.
Thank you, Director. That gives us a clear picture on ESG and what it means in practice. So thank you for the interactions in the comment section. Let's keep them coming. Francesca, we have people saying that that's a very insightful presentation. It's a very good presentation. It's well put and articulate, so we thank you for that. We have a comment asking about the Nachivubo channel and if the project is insured, but we shall leave that for the practitioner, Mr. Nicholas, to answer if the project is insured. They should, advise the clients to take up insurance. Director Legal has given us a global outlook of insurance, and it's promising. We should adapt, bring in AI, innovation, and based on the emerging trends. So we shall now move to our next speaker, because there are no further questions. We shall move to the next speaker. That is Ms. Gerin Magezi. She's the legal officer in charge of regulation, drafting, and compliance here at the authority. She'll be speaking on insurance trends that present the greatest opportunities for lawyers. In this evolving insurance landscape, like Director Legal had talked about, there are emerging trends that lawyers must look out for. So this is what Gerin is going to tell us. She's going to highlight those opportunities for lawyers. Garen will speak for about an hour, and then we shall take in questions. Please keep the questions coming in the chat box. We shall answer them. Apologies for that. We received a question on the guidance and the timelines on dispute handling. Garen will answer that question at the end of our presentation. So allow me to welcome Ms. Garen to present the next topic.
Okay. Thank you very much, Olivia, and thank you, Mrs. Francesca Kakoza, for the insightful remarks and the strong foundation that you have laid for the discussion. I completely agree with your emphasis on ESG and AI, and building on that, my presentation will basically focus on the insurance trends and opportunities for lawyers and how it connects with to the broader priorities that Mrs. Francesca has just highlighted. Good morning, everyone. Good morning, land friends. Good morning, colleagues. I would like to welcome you all to this session. And I must kick off by saying that the insurance industry is rapidly changing. And because it's rapidly changing, it definitely comes with a lot of legal opportunities. And this is not only in Uganda, but East Africa and globally, just like Mrs. Francesca highlighted. And this means that lawyers have a very critical role that they have to play in the industry. Well, in order to understand where the opportunities lie for us lawyers in the insurance industry, we need to appreciate why insurance law is evolving and why it is evolving in the first place. This is because the context of insurance is changing, and it is changing both economically, technologically, and socially. There are various factors that contribute to this, and one of them is innovation and technology. They are like the previous speaker stated about the digital platforms, the mobile insurance, AI that is forcing us to legally adapt to these new changes. Then secondly, we have the risk environment. It is very dynamic, it's not static. Because it's dynamic, it brings up new insurance needs. This is in light of economic, social, the climate risks that have been highlighted very ably by Francesca, and all these pose new insurance needs. So the risk environment and the way it's dynamic also explains why insurance law is evolving. And not forgetting, of course, the regulators are raising the bar. The regulator is pushing for transparency. The regulator is pushing for consumer protection and solvency. Under solvency, we shall look at the risk-based supervision. It goes without saying that global standards are influencing that, and they're shaping the law. This is why we see standards like IFRS 17 and ESG that require us to have them embedded in our local laws. And of course, as a result of all these factors, we have to respond to the real world changes. This is because, of course, as we all know, the law does not operate in a vacuum. I'll now turn to the insurance industry in Uganda, our landscape in Uganda, and the law, then the trends that govern us. Well, the insurance industry is basically governed by the Insurance Act, and a suite of regulations have come out to operationalize the Insurance Act. Amongst these regulations, to mention but a few, we have the licensing and governance regulations, we have intermediaries regulations, we have bank assurance regulations, we have capital adequacy and prudential requirements regulations, and all these set the standards for licensees. And when I say licensees, I mean the brokers, the insurers, agents, on how they should operate, and they set the standards in light of their capital adequacy. They set the standards in terms of governance and the requirements, including the functions in the functions that the licensees ought to have in their line of work. Well, when you look at the market growth, insurance market is steadily growing. We are looking at premiums growing at 10% from 1.76 trillion, and that was in 2024. The insurance penetration, of course, is still at 0.87%. Well, it is low, but this should not deter us. It's just a signal that there's a lot of growth potential. And with that, we need to understand that there are new products that are in place that are coming up. And we have emphasis on microinsurance. We have Takaful and Retakaful. Then we have oil and gas and health covers that are aimed at covering low-income segment or low-income earners. And when we go to the distribution side, well, bancassurance was a game changer, and that is way back in 2017 when it was launched. And now banks can ably distribute insurance, and of course, the ongoing regulatory tweaks when it comes to bancassurance, because we are looking at amending and broadening the distribution channels when it comes to bancassurance. Well, now let's turn to the regulatory modernization. Regulatory modernization has created plenty of compliance and advisory opportunities. And this is evidenced by the very big shift that has occurred under risk-based supervision. IRA, just like other regulators around the globe and East Africa, is no longer static. It's moving with the trend, and it emphasizes insurer solvency and capital adequacy. Lawyers here are basically required to guide insurers on meeting the new capital reporting requirements. This goes without saying that we have the capital adequacy and prudential requirements regulations that have been gazetted and printed, and they are out for distribution. So the lawyers, you should acquaint yourselves with these regulations. So you need to guide the lawyers on how they are going to meet these new capital requirements. Then another regulatory modernization issue that has been reinforced is the cash and carry principle. This basically means that one does not have an insurance policy if they have not made a premium payment. So premium payment is a condition that is precedent to coverage. And this has been enforced by the laws, by the tribunals, by the courts as well. So basically, you don't have premium, you're not covered. And thirdly, we have the Complaints Bureau, and this is an alternative dispute resolution mechanism that is at the Insurance Regulatory Authority. It has been set up for the industry. It is efficient, it is timely, and complaints are resolved in a very short time span, unlike courts where, of course, there are delays that may be beyond the lawyer's powers or input. So there was a question earlier, maybe this is the time I should take to address when it comes to the Complaints Bureau regulation, Complaints Bureau, the timelines within which complaints are resolved. Yes, we have the Complaints Bureau, we have a system, the Complaints Management System, where you can ably lodge your complaint, and we have to respond to the complaint within 5 days from the time the complaint is lodged. So an email or a notification is sent to both the insurer or the person who is being complained about, and they're required to respond with all the necessary documentation. A meeting to hear the complaint is set, and it has to be heard within 7 days from the time it has been lodged. And once the hearing is set, we basically limit the hearings to at least two minimum meetings, because we encourage mediation, we encourage amicable resolution of these complaints to avoid the adjudication and the adversarial court kind of style. So this, I can assure you that the Complaints Bureau, the Complaints Bureau solves the complaints in a timely manner. Then we have the Insurance Appeals Tribunal, of course, and this was established for disputes that arise from the Insurance Regulatory Authority, and recent decisions have also upheld strict compliance. You should also interest yourselves with the The Insurance Appeals Tribunal has a digest. It is rich. It has several cases that have been decided, and these lay a very good foundation for precedent and for your guidance in practice. Then another issue or a compliance and an opportunity that you need to look at as lawyers is the policy wording scrutiny. So the regulatory encouragement is to have plain language. Courts tend, of course, to construe ambiguities in favor of the insured. And of course, this is in line with the consumer protection. So lawyers out there, you need to advise the clients or the insurers to plainly craft the insurance policies or whatever agreements that they enter into with the clients. Because in the event that there is any ambiguity, we all know the contra preferentum rule, which will definitely be used against the draft of the document. Then finally on this slide, we're going to look at how Uganda is exploring inclusive insurance framework. The picture right now is regional integration under the East African community, and where there are ongoing plans and a lot of meetings have been held to have the East African community harmonization. All these efforts are aimed at having uniform insurance laws across the East African community, and this is aimed at easing the cross section. In the recent EASA meeting that was held, there was an approved strategic plan, a regional strategic plan that was approved, whereby common reporting templates that and shared supervisory standards were approved, and that was recently in 2025. And we were privileged to host this meeting, whereby the CEO, IRA, was part of this and made very crucial comments. So this is something that we need to look at. Well, in as much as we are aiming at having a harmonization or an East African integration, we cannot blind our eyes to the fact that there is still fragmentation. Each country, as we stand right now, still has distinct requirements. That is in line with the licenses, the capital, the product rules. So all this sets complexity for the insurers operating in the multiple East African community states. And this is where the catch is for the lawyers. This is where the opportunity lies. So lawyers can advise on the multi-jurisdiction compliance. They can help insurers, the brokers or agents expand regionally so that they can be able to shape the policies through these regional bodies that are out there, and they are willing and able to incorporate all this into one East African harmonized and integrated market. I'll now go into the global trends. And one of the global trends that has swept the globe is ESG. I don't know if I should delve much into ESG, into IFRS. Oh, it's IFRS 17, apologies. One of the global trends that has swept the globe is IFRS 17. This is an accounting standard. You might wonder why we are talking about accounting in a legal presentation. But the thing is, this standard overhauls how insurance contracts are accounted for globally. So it requires uniform recognition of revenue, reserves. So all these accounting standards have to be embedded in whatever that the insurers are doing, right from underwriting. So the impact that it has, that we have actually fully incorporated this, and IRA has, like I had mentioned earlier, has amended the capital adequacy regulations. It has conducted several trainings with the industry on IFRS 17, and new reporting templates have been developed to fit this standard, and those are the risk-based supervision returns. So, of course, it comes with the legal implications, and the legal implications are that there are changes in the profit timing, and these affect taxation and dividends. So lawyers, I know when it comes, some, not all the mathematics, we have to reconcile rules, and this is also an opportunity for us lawyers. So you can advise on the compliance. This is in line with the financial disclosures, the policy wording alignment, to ensure that the contracts and the insurance treaties actually reflect IFRS definitions, assist in the regulatory filings under the new standards. And in order to appreciate this standard, like I said, the capital adequacy regulations have been gazetted. Please acquaint yourselves with these to have a bigger picture and appreciate these more. Then, like I talked about ESG and sustainability, Mrs. Francesca really elaborated about ESG, but just because it's an opportunity, I'll address it briefly. It's an opportunity that, and why it should matter for lawyers, this is because this is something that started as a voluntary corporate social responsibility. And right now, as we speak, it is fast becoming hard law or regulation. Before we know it, there will be a regulation that requires everyone to heed to it and incorporate these ESG requirements into their operations. So IRA is developing a policy, and sooner or later, it will be out there and for everyone. And we expect that the future requirements for insurers is to report on issues like climate risk and integrate ESG into investments, into even the underwriting. This is still an opportunity for the lawyers, and the lawyers can help insurers to draft these ESG policies, because this is an area that may seem has been talked about a lot but not really appreciated. So this is where we come in, help the insurers draft these policies, help them comply with the disclosure standards, advise on the climate risk, and also ensure that the corporate decisions meet the emerging governance norms. A case in point, actually, of recent, there was the global insurers. They're already facing issues when it comes to ESG. And one of the major issues that occurred was reinsurers actually refused or were hesitant to insure the East African crude oil pipeline basing on ESG grounds. So local insurers, they'll need counsel on such ESG-driven decisions, and this is where the opportunity lies for us lawyers. Let us now discuss the digital revolution in insurance, and this is often dubbed as the InsurTech. Like the previous speaker noted that about digital distribution, there's a rapid growth of online and mobile insurance sales. That is policies that have been sold via mobile money apps. They're raising licensing and consumer protection questions. All this is done in the digital world, and it's actually booming. And IRA has not been left in the loop. It has responded ably when it comes to digital or to the InsurTech by introducing the Innovation Sandbox. And this is aimed at piloting InsurTech solutions in a controlled environment. So a sandbox is basically a safe space where innovators can come up with products and test them actually on real consumers, but in a controlled environment. When you talk about digital insurance or InsurTech, we have to talk about data and privacy. The use of big data and AI in underwriting claims to personalize the pricing and detect fraud. We have to be cognizant of the Data Protection and Privacy Act, whereby the consumers' data has to be protected and also avoid discrimination when it comes to the algorithmic underwriting. So all this is a very green area that lawyers should look at and emphasize data protection. Of course, cyber risk coverage is another facet that cannot be ignored when it comes to InsurTech. Insurers are offering cyber insurance actually, and they are facing a lot of cyber threats themselves. Their information, so lawyers need how to have a proper guidance and guide them on the policy wordings and the incident liability assessment that may accrue over time. So the opportunities lie when it comes to advice on the digital platform agreements, and soon we shall have the technology platforms that are in place. Ensure that the e-signatures, because we have the electronic transactions and innovative products, and litigate the emerging disputes. Like I said earlier, the liability for the algorithms are trend, and it raises to mergers and acquisitions, because these transactions create a lot to mergers and acquisitions, because these transactions create a lot of demand for legal expertise, at every stage, which requires extensive due diligence on the target, assist the parties to acquire those regulatory approvals, and also the meticulous transaction structuring of that documentation. It has to be smart and comply with the Ugandan laws. So every merger and acquisition requires lawyers to navigate the corporate and the regulatory competition law issues, also the employment issues that may arise when it comes to the mergers and acquisition. How are the employees of? So this makes it a very significant area for growth for legal practice. Now we're within a set period. So gone are the days when a claim is lodged and the insurer will take a lot of time to respond, but there are guidelines in place whereby they have to respond in a given timeline, ask for the necessary documentation, do the necessary investigations where required, and all this is also an area for lawyers to tap into. So another area to tap into is the enforcing of the policy terms. So the policy terms, like I stated earlier, have to be clear. The conditions have to be clearly stated in the contracts and in the policies, and they have to be held strictly. So those ambiguous exclusions that create confusion among us when it comes to claim payment or lodging of claims, they will be construed against the insurer, of course. Then another issue that we need to appreciate when it comes to the litigation trend is the agent and broker liability. Of course, as we all know, the principle of agency. Principles are bound by the actions of the agents, and this has been recognized by the Supreme Court in Oriental Insurers Brokers versus Transocean. So one might wonder, or most often, is it the principle, but of course, the agent is responsible, is bound, the principle is bound by the actions of the agent. And lawyers see these cases of misrepresentation a lot. They are happening, and people are misrepresenting themselves as agents of insurers, leading to insurer liability for cover. So this is something that you need to acquaint yourselves and tap into. Then when it comes to bank assurance disputes, banks are selling insurance on the rise. Yes, that has been very common. And the questions that will be asked is, who is liable for the advice? So can one sue either the bank or the insurer? So all these are areas that are rich for lawyers to tap in, to interpret and guide the parties. And of course, there are notable cases that have been decided by both the by the courts, by the Insurance Appeals Tribunal, and one of the recent cases is Nambale and Nerima Advocates versus Liberty, and this was headlined in 2024 by the Insurance Appeals Tribunal. It was emphasizing that in the event that you do not have premium paid on an insurance policy, then you're definitely not covered. And there are also various evolving jurisprudence that is coming out on subrogation. This is a very important principle when it comes to insurance. We have third-party rights, we have accident victims, we have takaful. So all these are trends that lawyers should tap into. So having addressed the opportunities that we've talked about, having addressed the opportunities that we've talked about in the insurance industry and the trends, we now need to clearly spell out what roles and services that lawyers can provide in light of these trends. So one of the services or the roles that lawyers can play in this is policy and contract drafting. And here you can craft and review the insurance policies, endorsements, and the distribution agreements. So here, lawyers, you can draft these contracts. And then you can also become regulatory advisors, because all these things require regulatory approvals. The regulator requires certain documents to be filed. So the lawyers can come up and become regulatory advisors and assist the insurers, the brokers, the bank assurance agents in filing these compliance documents with IRA. And this includes the IFRS reports, the ESG checks, and the data privacy. Then another opportunity, on how to fit into these trends is litigation and dispute resolution. And here you can represent the clients in claims disputes. You can represent them in court, both in appeals, both at the tribunals, and much as at the complaints bureau. One is free to have a lawyer present, though we usually emphasize, but these are also opportunities that you can seize. Then product development. Counsel, you can be useful when it comes to product development. You can assist insurers in obtaining these product approvals, or even being innovative yourselves and come up with products that suit that are in line with the insurance guidelines and the laws. So you also have to align these product terms with the legal requirements. Yes, and another opportunity is ESG and training. You can develop these internal policies on ESG, conduct trainings for insurers, and even the claims handling, including, not forgetting, the anti-money laundering compliance. All this is in line with sustainability. Then the corporate transactions, of course, you can advise the companies when it comes to mergers and acquisitions, in the event that there are portfolio transfers and cross-border expansions, ensuring that there is due diligence that is carried out and the regulatory approvals are actually properly managed. So you can see that there are enormous opportunities that we can tap into when it comes to the insurance trends and opportunities. So in wrapping up, I need to emphasize that we lawyers can turn these trends into tangible career and business opportunities. Yes, and the insurance sector, of course, is usually seen as something technical or a niche, but we have seen that it touches many cutting-edge issues. So we need to leverage these trends and not leave them hanging. So how do we leverage these trends? How do we take hold of them and not lose out? First and foremost, we need to be proactive. We need to anticipate the legal needs. Right now, we've understood that there is ESG, there is TACAFUL, there is oil and gas. So definitely we shall have, you will anticipate that there will be legal needs, climate risk underwriting. So by being proactive, we are trying to anticipate these legal needs so that we come and speak from an informed point of view and inform the people about the new compliance and the emerging areas rather than them. Yes, and then the second is stay informed. You need to keep up with IRA and the notices it issues, the laws that are put out, and the regulations, the key judgments from the tribunal, from the Insurance Appeals Tribunal and the Complaints Bureau that is stationed at IRA. So all this will keep you informed. You'll have enough jurisprudence and a lot of precedents to hinge on when it comes to insurance. Of course, education is one way that you can leverage these trends. You can embrace studying, and then career opportunities are very many. We have the Insurance Training College, which is an accredited institution, and you can get a lot of trainings from the Insurance Training College. Then we have the Chartered Insurers Institute, UK. All those are career opportunities that you can delve into. Then lawyers you can also position yourselves and be part of the client strategy team. You can help them become innovative, navigate the East African community expansion, not just as a problem fixer, but be a strategic partner. Then when we look at the regional outlook, we can develop familiar insurance laws, of course, by benchmarking on the East African laws that are already existing, and find a way of bringing them home and have a regional integration. So this is something that will also be rewarding and in one jurisdiction. So, and finally, we need to engage. We need to engage in law reform discussions through this law reform, that is through Uganda Law Society. This is just one of the platforms. Yeah, it is rich, and it gives us it gives us a platform. Yeah, so we can engage with Uganda Law Society to help modernize insurance and help the lawyers have a chance to shape a future. This is because as lawyers, we are critical enablers of transformation. So let us shape the future and not just respond to it. Thank you. That's all I had.
Thank you so much, Girin. I think we can all agree that that was a very enlightening presentation on the emerging insurance trends for lawyers. Before we go to the questions in the chat box, someone has asked if the slides will be shared. GLS will do that. They'll share the slides. Also to inform the lawyers that we have a Complaints Bureau digest. It compiles the key decisions made by the Complaints Bureau, and the publication is on our website. Please check it out on the website. Girin, you have comments saying that's a very insightful presentation. Girin, you talked about, the previous speaker, Director Legal, had talked about the evolving regulatory landscape. So could you just highlight for us the regulations in the pipeline that lawyers should look out for? And also among the emerging trends that you had talked about, you mentioned Takaful insurance. Just give us, just throw more light on Takaful and update the lawyers where we are at the moment with Takaful. When she answers these questions, we shall go to the ones in the chat box.
Okay. Thank you, Olivia, and thank you, the audience, for the questions. Well, we have several regulations that are in the pipeline, and these are going to be very informative. Among the regulations, we have the premium regulations, and these will further guide on the payment of premiums by the policyholders. Then we have the Policyholders Compensation Fund regulations. These are also in the pipeline, aimed at protecting policyholders in the event that an insurer goes down or has become insolvent or is unable to continue in business. The fund will be there to protect the policyholders. It's going to be like the Deposit Protection Fund. I'm likening it to the banking sector. So yes, those are regulations in the pipeline. Then we have the winding up regulations that are going to govern on how insurance companies are going to be wound up. You notice that policyholders need to be protected. So in the event that an insurer is going to be wound up, we need to emphasize protection of the policyholders. Then we also have consumer protection regulations that are coming up. These are also in the pipeline. And of course, these are aimed at protecting the insurers, not only the policyholders, but the consumers of insurance. Then we have the Complaints Bureau regulations. These are coming up to solidify the Complaints Bureau that is hosted here at IRA, and where the complaints will be ably heard. Not that they are not already being had, but these are regulations that are also in the pipeline. Then currently we have the Complaints Bureau directives or guidelines, which are also on the website. They are very rich, they are very detailed, and they expressly put out the procedure that we follow when it comes to complaints handling. Then we also have the consumer protection. I've talked about consumer protection and corporate governance regulation. These are also in the pipeline. And these are going to enlighten on how the governance of the insurers and the brokers and how they are going to operate. And finally, we have the Takaful regulation. These are a low-hanging fruit. Anytime they're going to be rolled out, and these are going to actually talk about Sharia compliance and Takaful and Retakaful. Yes, Olivia, your second question was about Takaful insurance. Yes, Takaful insurance is one also of the most important emerging trends in the Uganda's insurance landscape, and this is a space that lawyers need to also pay close attention to. Takaful is essentially something that requires Sharia compliance. It is a cooperative system that is based on principles of mutual understanding, shared responsibility, and it's not like conventional insurance. It actually prohibits uncertainty, that is garar. I don't know if Muslims are familiar with that, of course. And then it also prohibits interest, which is riba. So instead of the conventional insurer-insured relationship, Takaful operates on a model where participants contribute to a common fund, more like a brotherhood, until if a catastrophe occurs, then the brotherhood that has been coming together will come out, and then they will pay out the risk. So for lawyers, this is an emerging area, and it has a rich opportunity because it introduces new legal and contractual frameworks that departs from the conventional insurance that we are used to. So drafting Takaful contracts is something that you need to look out for. Then get acquainted with the Sharia principles that are supposed to be heeded to by the Takaful operators or the Takaful windows, and also the prohibitions that are under Takaful insurance. So, like you rightly mentioned, the Takaful regulations are in the pipeline, and these are in line also with the Insurance Act, and they're going to operationalize the Insurance Act. So let us look out for this. I hope that has ably answered the question on Takaful.
Yeah, thank you so much, Karen. That has answered the questions. Going to the questions in the chat box. Someone had asked, a number of complaints take a year to be resolved. The complaints guidelines are unfortunately silent on the timelines to have a decision. Is there any hope of having the Complaints Bureau guidelines streamlined and improvement on disposal of complaints? I think Gerin has answered this question. We are currently developing the Complaints Bureau regulations to really streamline the process, but at the moment, the Complaints Bureau guidelines are very effective. Yeah, Martin, I agree with you. ESG being a new trend needs more attention, and that's why we are coming up with ESG regulations, but we'll first issue out guidelines to the insurance industry as we prepare the regulations to tap into this trend and guide the industry on how to go about it. We have a question. We have a question on, can parties agree to pay premium at a later stage, even when the Act is emphasizing cash and carry, or payment of premium first before the policy can be effected? Gary, you had talked about cash and carry. Maybe you can elaborate more on this this topic. We also have a question on motor third party. Kindly enlighten us on why motor third party isn't classified under life insurance, especially if it's affecting life directly, bodily harm or death. Would you take the question or? Okay.
Okay, thank you, Olivia, for the questions. Well, when it comes to the Complaints Bureau and the cases that they've noted that take some time to be decided on, well, some complaints are complex and some come mad with fraud, whereby we have to engage into fraud investigation. There are investigations that are supposed to be carried out, and onboard assessors. So that is why some complaints might take long to be resolved, because of their complexity in nature. But other than that, the complaints are resolved in a timely manner. Okay, the question on cash and carry. Well, the act is very clear, and as lawyers, I think we are very alive to the fact that you cannot do or operate anything outside the law, where the law has clearly elaborated. So you can only be on cover under an insurance policy if you have paid premium. There is no such thing currently as paying premium later, because in the event that a risk occurs, or the risk occurs and you have not paid premium, then what will the insurer use to pay out the claim? So you're basically not on cover. You either pay the premium and you're onboarded and they get a cover, or you're not on, without premium, you're not on cover. Kindly repeat the question on motor third party.
Okay. Kindly enlighten us on why motor third party isn't classified under life insurance, especially it affecting life directly, bodily harm, stroke, death.
Okay, thank you. Well, motor third party is a liability cover, and this that is not brought by the one who is affected, but by the one who is going to compensate. So it cannot be brought under life insurance because it's just a liability cover.
Okay, we have another question. Thank you so much for the engaging session. Keep the questions coming, even if it's not related to anything that has been discussed by the presenters and anything on insurance. Please send your questions in. We appreciate the engagement. We have a question on IRS circulars. Gerin is really the best person to respond to this because she's the Officer Regulation and Drafting. So could you elaborate on the legal standing and binding nature of the IRS circulars and guidelines? Do these possess the force of law and binding? We've seen a comment on the presentations keep freezing. We apologize for that. Let's work on it. And also someone had commented about the video coverage dropping, video quality dropping. I don't know if it's better now, but let's work on that. We apologize for that.
Okay, thank you. On the issue of circulars and guidelines having a binding effect, well, IRA has the mandate. It's one of its objectives and functions, which is to supervise, regulate, and set standards for the insurance industry in Uganda. So what IRA basically does is to issue circulars and directives. So these have a force of law, and the force of law can be also emphasized by Section 120, whereby the authority has the mandate to issue directives. And in the event that an insurer or a broker or a licensee does not heed to these directives, then they can be penalized under that section. So the guidelines that we issue are more of guidance in the event that there is anything that is not clear in the act or in the regulations. All the insurers need clarity on any directive that has been given. That is when IRA will come out to give guidance. But other than that, we issue directives, and this is one of our core mandates and functions. And we also deal with insurance-related complaints.
Okay, for the purpose of keeping according to our program, let's first go to our next speaker, and we shall answer the questions as they come in. Please keep sending in your questions. We appreciate that. So thank you so much, Gerin. Our next speaker. Yes. Thank you. Our next speaker is Mr. Nicholas Lutakome. He is the CEO, like I'd earlier mentioned, but I'll just repeat his profile for the purpose of the members who had not joined us at the beginning. He's the CEO of CIC General Insurance. He has over 18 years of experience in insurance practice and possesses extensive knowledge in life, non-life, and medical insurance, so he can answer your questions of what is life, what is non-life, general life insurance, all those. He's deeply grounded in technical underwriting, reinsurance, brokerage, claims administration, and loss adjusting. He'll be speaking on the relevance and impact of artificial intelligence on the insurance industry. So in other words, how AI is changing insurance. This is a topic that's of importance, like Director Legal had mentioned. AI is influencing risk assessment, claims processing, customer service, and there are new legal considerations and opportunities. Please join me in welcoming Mr. Nicholas to this training. We're grateful to have you here.
Thank you, Olivia, for the introduction. Good afternoon, our audience. I can see we have over 130 online, and thanks for staying with us this far. The topic here before us is AI relevant to insurance. That's what I picked in preparation for this. The short answer is yes, and I think I can take my leave. So the underlying thing is, of course, understanding what insurance is. Insurance doesn't operate in a volume. It operates in a value chain whereby we offer promises for people who purchase or who own things, and we want them to own them with a premium. What that means is, if you own something without insurance and it gets lost or gets damaged, you look for money to fix that. If you own something with insurance, it's premium, you go back, they give you something new. So that's the basis. So whenever those other industries that sell those items or sell those other propositions are exposed to AI, insurance is also exposed to AI. As introduced, my name is Nicholas. I have the pleasure of serving at the Cooperative Insurance Company, abbreviated as CIC. And just to give some bit of background to this is the artificial intelligence is something that has been over-explained. It's relevant, it's practical, and it has shaped the insurance industry world over. Uganda is not operating in a vacuum, so it's also that area that is being affected. So looking at the market opportunity that we have in Uganda particularly, Uganda is one of the youngest populations in the world. About 70% of our population is below 70 years. That's the pyramid as per the last census that was done last year. So what that means is, in a nutshell, those are digital natives. And by being digital natives, AI being one of those revolutionaries, it means that the mobile phone revolution that we have with existing infrastructure development happening into that sector, it's an opportunity for AI to change the way all industries work. So whether someone operates a smartphone, Android, iOS, or operates a Nokia, which is simple, the generation we have, the country we have is ready for that, and they are using it. The penetration rates are high. So the other bit that we have as an opportunity is the low penetration of insurance. On the continent, we have a figure there of about 3%. It is actually much less than that if we put South Africa and Namibia out of those numbers. The penetration rate is below 0.5 for the rest of the countries if you did an average. So what that implies is the market is not saturated. there is further opportunity for growth, and there's a bigger opportunity for people to embrace insurance in the societies they live in. It's not like people have been oversold to insurance. They have embraced it. They can no longer take on something new because they are used to the old style and all that. There are so many people that we haven't tapped. So it's a very, very big opportunity for people who want to invest or who want to associate with the industry. I would encourage more of investment for the lawyers, and I will explain my reasons. A lot of the insurance firms that we have that control our market are foreign owned, so it will be good for the affluent lawyers to look for opportunities to partner, and they partner to look for the opportunities. The mergers and acquisitions don't have to come out. They can still be mobilized locally in order to take control of the market. So the functional domains that we have in terms of AI impacting insurance, I will not mention many, I'll just mention a few. The way insurance works is we do have an opportunity where we deal with risk. Like I mentioned in the introduction, and the speakers before us, we know that we are dealing with risk. So in doing risk assessment, what we do without AI is we give you a questionnaire and you tell a story of your life, how you live it, where you're going, what's your intention of buying, how your lifestyle is, and so many of those details. In a nutshell, what AI does is if we integrate with the right partners, we can be able to actually give a predictive onboarding experience that looks at your particular circumstances and offer the most commensurate cover, not necessarily the most affordable, but the most commensurate cover to the member who is applying. The process, that's the process that the speakers we are talking about as underwriting. Up to now, I don't know why our forefathers gave it such a damn name, but probably as AI comes in, we'll update such terms. So the next one is one of the biggest things hitting insurance is fraud. So when you have AI embedded into the value chain for insurance, you can close some loopholes for fraud. Fraud can happen before a person comes into the insurance side, or it can happen when a person is in. Someone can, I'll give an example, someone can decide to take out a life insurance cover on their spouse because they have already decided to kill them. And then as the insurance law goes, you know when you can insure your spouse unlimited. When you have AI, there's a lot of information you can leverage on how their relationship has been in the past few months, and then you move a bit cautiously. Or when a person is into the value chain insurance, car insurance is the most common one. Most people have accidents, they settle matters with whoever has knocked them, then they come to insurance and get a double share of the money. So when you have AI and you have the benefits of AI and detecting this information, picking it from both sides and consolidating it together, you can be able to eliminate some of those occurrences of fraud that can happen. Most importantly about insurance is the claims process. The claims process is automated, and when it's automated, the customer normally gets a better experience because the turnaround time can be improved. All those are potential advantages of AI. They are not bulletproof. So the right work has to be done in the right market to ensure that these are serving the purpose. Ultimately, once this is done and you have the right market for you, you have the right people coming in for insurance, we do have a good customer experience. When a customer is interfacing with insurance, it's hassle-free. One of the companies that deals with homeowners insurance in the US brags about settling claims or processing claims within 30 seconds because they have specialized in one line of business and they have data, they have deployed AI. We are not yet there in Uganda, but that's the direction we are taking as a market. As I said, we have to have solutions that meet the the scenarios that we have. One of the things that we have, I think Director Legal mentioned something about the fastest growing class of insurance being medical. So you can come and say someone's premium being paid monthly is determined by the level of activity. So if you have wearable devices like the one I'm putting on and you're sterile for a lot of time, the insurance company can be able to tap into that data to determine your premium the following month. What that means is you can leverage your lifestyle to pay less, and a person who is sedentary does not do that. That has its own pros and cons, because I was joking about this the other day. I can give my 7-year-old daughter the watch during playtime, and I sit to watch my movies, and I get that. So, like I said, it has to be customized to the market, and more work can be done to ensure that happens. Things like fraud can be bordering on privacy. Sometimes you do have instances of when you're trying to detect fraud, are you invading on someone's privacy? I'll give an example. In Kampala, we have this thing of Kaunyemu, which is no longer there. So if I tapped into your social media network and I realized that on a Friday night you are busy partying somewhere else, and Saturday morning at 4 you are involved in an accident, I can easily use that predictively to detect fraud. However, on the other hand, I could be chasing away many who might want to come in because they feel they have no privacy. So things like that we have to think deeply about it. The other bit that is very important for people to know on insurance is not a very easy trade to engage in. It's a very complex industry. Complexity is, in a nutshell, it's not as easy to buy insurance products. It's not like it's not as easy as going onto Jumia to order for a phone, for instance, or going onto Amazon and buying a book. It's not very easy. It's possible for some products to be done that way, but if it is being bought for the purpose it is, that complexity is there because every person comes with a particular need, with the risk circumstances that differ. So it's not very easy to put it on the shelf, but it's possible. So that complexity explains why sometimes we do not have a lot of, we are not fast movers or we are not fast adopters of the technology because it can serve certain markets, it may not serve others. And normally when you have a segregation bit of how you apply it, regulators have a challenge with that because they could be deeming you for discrimination, and you cannot be discriminating, you have to be inclusive. The other bit is trust. So insurance is not trusted, not only in Uganda but world over. Maybe the trust index is something that needs to be tracked to know why the trust levels are high and the trust levels are low. So because of that trust, people are simply not going to trust that I'll pay my money and wait for the result. So there is a lot of buying of the individual. If in Uganda, one of the fastest growing lines of insurance is life, and one of the things we observed in life insurance is when you recruit new sales agents, they always come with business in the first 3 months, and the reason is simple. They go to their social circles and people are buying them because that social circle hasn't been exploited, and they realize that one of their colleagues is into it. They easily buy that person more than the company behind the policy. So if it is AI, the trust level or the convincing nature of AI might be gravitating towards other things like mobile phones, like data, like, the other products that we have that are not necessarily substituting insurance, but maybe not insurance at first sight. There is normally a need to talk to someone, on the other hand, to get the assurance that it is really possible, it is really there, and this thing actually works. So that goes to the other bit that we have as an opportunity. I talked about embedded insurance partnerships with massive distributors, whereby using the scale that these companies have and the massive piles of data and the trust they have built with their customers, you can embed an insurance product into their offering and you don't have to sell it to their customers. You sell it to them and they use it as a competitive edge to build loyalty. If you go to a supermarket on Saturday and you convert part of your shopping points into an insurance coverage for the fixed items you bought in a supermarket, if you bought a TV, you bought a fridge and that kind of stuff, that embedment can build more deeper penetration of the products into the market. What that requires sometimes is too much integration to understand the lifestyle, where the person stays, what items is buying and other associated items. It could be an easier way to deepen the market and get more of that. The other way of automating is in what we normally call compulsory insurance or mandatory insurance. For instance, the most common one in Uganda is third party, or most people call it third party because of the perception that they have. It's normally deemed as a tax. The fact is 70% of the premium is tax. So the people are not necessarily wrong. But when it's mandatory, we can automate. We can use AI because people are not necessarily buying it because they want it. They buy it because they have to be on the right side of society. As Uganda Law Society, you can have your own preferences. You can say, to practice as a lawyer, you need professional indemnity in line with your turnover or the volume of work you're doing. And this cover has to be renewed every 12 months. So you can use AI to simplify your process. Here, you're not necessarily buying insurance because at first sight you fell in love with it, but you need your license to operate. And part of the reason it is required is to safeguard those that you're giving advice as the lawyer. So those are opportunities that we have to embed and unlock the functional domains that we have to unlock the potential of AI, where it could be easier. It's not very easy or very possible for someone to come, like Ham, who is putting up the construction site downtown. Someone asked something about it, to just go into AI and organize insurance for it. There's still going to be that manual intervention to make sure that we are getting things right and we are having everything running as per. And just to answer that question in a nutshell, that project is insurable, it is eligible for insurance, and it's non-solate. And what builds the focus and the confidence of the people who are affected by things like floods or poor workmanship is the insurance coming in and telling them it's okay, we are going to compensate, just like it has happened on several occasions at the fires that used to happen in the markets. So that's the bit about that. If that is all good and workable, why isn't AI being used in insurance today? That's probably a question that we have to answer. There are certain roadblocks that I like to call strategic because everyone has to get on board. We do have industries that we partner with to do insurance, the people who manufacture the things that we insure. We do have suppliers of raw materials on our side as insurers. We normally call them reinsurers. They are our insurers. So before we attach that value chain together, we cannot just say we are embracing AI. Everything has to be supportive for this to work well. So that's why a lot of these are not as easy as it looks. So I'll break this into about 3. I'm not saying the list is exhaustive, but just to talk about 3 issues. So we have legacy issues in our industry. So one of them being our regulatory framework. So there are certain things where, for instance, you need pen and paper. If there is no blue ink on a paper, then that contract is a little bit wanting and it can be, is it voided, or the language that the lawyers use. So we have legacy issues that can be regulation. We have legacy issues that is the people who are making decisions. So if you look at the average age of our boardrooms, of our excos, it may not be necessarily that you want to push to make the priority decisions to move AI. The other legacy issue we have in a market like Uganda is we do have a market that is on the receiving end. Francesca mentioned the 92 billion market in Africa. The contribution of Uganda to that is about 0.5%. So the global players out there are the ones playing in our market, and they have to take the lead. And whenever they innovate something, it has to first work in their countries before they roll it out locally. They are the ones with the financial capital, the muscle, and they are the ones with actually the scalability to get these things done. So we end up moving slowly as a country if we are still controlled by those strings that we have in the market to play with. So, and a number of other, many other things. Someone talked about data privacy. There are laws around here. So we need to make sure that all the T's are crossed before we can roll this out. So that is not normal and is a journey, because you could have laws that are not synchronized in all the markets you're working in. And if you're working for a regional or multinational player, that slows down the process and the priorities that the decisions have to, the priority to have the decision done. Then data bias is the big one. So data bias is about you build an algorithm to price a product. I talked about the scenario where I can give my smartwatch to my 7-year-old daughter and I gain those points. The fact is you have the data, but it's biased. Or it can be something as simple as someone's claim being rejected because of what AI has done. And maybe the data that was used to construct that algorithm was inward looking. The natural reaction when we are developing these algorithms to do the AI for insurance or maybe other sectors is to look at the data we have. Who is to say that the customer tomorrow is going to be subjected to that data? That is a question that we have to look at. Or we use a simple example. If you're looking at a possible good candidate for a CEO for a company in Uganda, let's say insurance as I know it, that has to be an average male, maybe in his 40s, who grew up in the south of the country. But who is to say that people from other who grew up somewhere else, who are female or who are younger, cannot make it? So there is a lot of that data bias. When this is being developed, that creates an imperfection in the system that we need to address and look at to ensure that we have a seamless implementation. And this is actually the reason why globally insurance AI hasn't kicked off that much. When you look at the companies that have embraced it, they are still small time players. The bigger players are talking about it, but you don't feel it that much. I'm not saying it's not working well, but it is being weighed down by some of these roadblocks that we are looking at. So as I conclude, it's looking at the future of insurance. You can fill in the blanks with anything you want there. But I just wanted to talk about two things. Just like other sectors, people fear insurance is going to AI is going to take away their jobs. Insurance is the same. So is it going to be humans against AI for insurance? If is humans going to fight with AI? That's the thing. So brokers, loss assessors, staff members, are they going to become obsolete because we've implemented AI? That's something that a question that I can't answer fully. The other way of looking at it is scale. Is it going to be, the future of insurance, is it going to be humans enhanced by AI? Because in my experience, most of the people who are going to buy insurance tomorrow are going to be new to market. And because of the trust issues we have in Uganda particularly, and even globally, those people are going to need someone to talk to. I normally talk to my colleagues on the other side, on the health side, because we work together. When you try to do telemedicine and then phone consultation, do you picture a mother of a 3-year-old picking up a phone to call a pediatrician and getting comfort that they have gotten good help. The only way they will call a pediatrician is to find where the location is, because the magic of touch to that child is the healing magic. So the same thing here. For someone to buy, because insurance is not bought, it is sold, they are probably going to need something more than a search engine or a portal to plug in and buy. So we are going to need quite a bit of humans enhanced by AI. What AI would mean, that an average agent who was selling to 10 customers a month is able to sell to 10,000, because he's not doing the repetitive work he was doing, as opposed to the AI coming to do the work of an agent and signing up business on their behalf and then making them obsolete. And by having that ability and getting masses in, I believe insurance will become more affordable and accessible, and the experience would be better. So I would like to thank you for listening to me. I have some answers to the questions. I still also have more questions, because this is about the future, and I'm open to learning as well as sharing. So thanks a lot. Let's keep the discussion going.
Thank you so much, Mr. Lutakome, for that presentation on AI. It really got my attention. It's very interesting what's happening in the insurance industry, the developments. So we thank you so much. It's a very nice presentation. I can see the comments in the comment section saying that it's a nice presentation. I got curious when you mentioned about the underwriting and how that you'll use AI to, before now we're filling in forms, but now if you're going to use AI, you also talked about the data bias. So for example, if I'm taking up a medical policy and I tell you that I don't have an underlying condition, and an AI says I have an underlying condition, I don't know what mechanisms you've put in place for things like that, but though I know that the AI will help in, make things faster, but there are certain things that will bring, how do we ensure that now more risks don't arise from that? Then I like that you talked about trust. Trust is a very big deterrence to the insurance uptake. And it's a very good thing that insurance companies are thinking about bundling products with other trusted partners. So this is a very good idea. So I'll, before you answer that question, at the moment, there are no questions particular to AI, so you can answer that question and we move forward. Thank you.
Thank you, Olivia. Like I mentioned at the beginning, insurance does not operate on its own. Insurance without other sectors is meaningless. So for instance, the example you used on health, the healthcare sector is the driver behind insurance. So if we have people, and the eligibility requirement for you to get insurance is to have a health ID, that means that we've managed to partner with the healthcare centers to create an ID for each person, and it is linked digitally to their NIN or their fingerprints. Everything is picked. We don't even need to ask you a question about underlying conditions, because your previous visits can easily be accessed the moment you opt in and tick that box, and then the underwriting is done. Same thing with driving. So you have police on one side, on the other side you have the garages that handle these repairs. It is so sad that the manual way, you can have the same model of a car priced differently. You can imagine, because we import cars differently. Same model, same year of manufacture, they are priced differently, they pay different premiums, they get a partial claim, and the one that paid less is actually having a higher payable than the one that is paying lower. So what AI does is synchronizes that if you're driving a Toyota Primo 2017, manufactured between January and June, the question is not a rate of 4%. The question is your consolidated premium is this. Just like, it's whether you imported it and saved on an import, that was good for you, but that has been standardized. And, working with URA, working with all these other bodies, we can do that. Then the moment you get a claim and you need to replace a windscreen, we don't ask you for 3 invoices. We already know with AI that a windscreen of a Toyota Primo this much costs a range between this and this plus or minus 2%. And that has been automated. So that already eases the experience of a customer, because then the garages are accredited, they are on the panel, and whenever an incident occurs, they don't wait. You don't have to go looking for a garage to fix that. So there's a lot that can be done, but insurance alone in isolation cannot achieve it. It has to work with other sectors. So that's the bit that will make a difference.
Okay, thank you for the response. You know the saying of people scared that AI will take their jobs, but the people who use AI are the ones who will take their jobs, not AI, and that was a very good. We have some questions. We have a question on AI can help manage risks, detect fraud, and automate claims, but it's not bulletproof. In your view, what safeguards should insurers put in place to ensure AI supports decision making without introducing new risks? And then also another one on please share more. Oh, they thank you for the wonderful presentation, and they ask you to share more on parametric insurance and telematics in insurance in relation to AI. These are very complicated terms.
Okay, thanks. I'll start with there's a question up there. Why is third-party taxed? So that's a question as an industry we can't easily answer. In isolation, everything you buy in Uganda is taxed. So insurance in the same spirit is also makes its contribution to national development. So that's the reason why it is taxed. That's the best I can give for now. Whether the taxation is fair or not, wrong forum, that would be a different forum that will address that. The second question was about there's a question about parametric insurance and telematics in insurance. So parametric insurance, I will use an example of agriculture. So when you want to insure your farm, let's say you realize you need to plant maize, you have a farm in Amuru. You have your 20 acres, you want to put up your maize because you know the season is coming, and you invest your money or borrow money partly, and then you expect a yield of this much. The traditional approach is, as insurers, we will look at, of course, the farm, look at the yield and guarantee a percentage of it. If there is an incident and you say there was a drought or there is excessive rainfall or one of the calamities that is covered, we will have to depend on the satellite imagery to do that. When you do the parametric way, you avoid that. What you do is you zone in a region and you pay premium based on the incident that has occurred and what is at stake. So what that does is your cover has been tailored to meet the risk at hand at that particular moment, as opposed to the traditional approach where we have to indemnify, to put you in a position that is based on work that has been done after the incident. What that means in a nutshell is we've underwritten the policy and vetted the claims on issuing the policy. So meaning whenever claim occurs, for as long as we prove that the incident occurred, we pay that amount of money, which is normally less as a fraction of, it's not a full extent of cover, but it simplifies that. Then the issue of telematics is largely about what condition the person is in. So for instance, if you're going to travel to the UK and we have, AI has been embedded into the operations of the insurance company, and we realize using whatever resources we have that you've just checked in, you dropped your bag at the baggage, we can broadcast for you a message to opt into travel insurance for that trip. Because we are not selling to you travel hoping you travel. We are selling you travel when you've actually checked in. So it's selling something to a person who actually needs it. We realize that you've just swiped a card to buy a fridge from Carrefour. What does it mean? Then we broadcast a message to you that you can actually insure that fridge if you did ABCD. So it's looking at the circumstances of a person and the circumstances and then the risk that could be at hand and selling a simple product to them that talks to their circumstances in real time. That's how I could do it. I think I've forgotten, there's a question in between that I've forgotten. Olivia, you could remind me, I'm growing old. Yes.
Not as old. The other question is on AI can help manage risks, detect fraud, and automate claims, but it's not bulletproof. In your view, what safeguards should insurers put in place to ensure AI supports decision making without introducing new risks?
So one of the things that is very crucial in that process is something that should actually be pushed from a regulatory perspective. If you're embracing AI into your operations, you should create a window for human review. If someone feels aggrieved on a decision that has been made, they should be able to appeal. The other bit is keeping updates on your algorithms that you're using to drive data. The example I gave earlier, you based your model on the database of customers you had in. But the insurance industry is insuring less than 2 million people out of 40. So there is nothing probably that we have to start somewhere. Let's say we start with 2 million and we look at their behavior and how they have been behaving and then use those to judge the 38. The question is, we have to keep updating that because the market out there is wider and the last thing we want is to be non-inclusive for the others. So those are probably some mitigations or some interventions that we can do, or we cannot pick AI based on a different market. There's a case of a supermarket. There were 2 supermarkets in a city, in an African country, that were having 2 different systems. So one was self-service. They had very few employees who don't talk to you, they just serve you. Another one had people who would spend 5 minutes with each customer, asking about how the children are, how they last saw them, how is the wedding preparation going for that person in the village, and so on and so forth. So for some reason in a particular town, the one where more time was spent, more locals would buy there, and expatriates were going to one where everything is automated and seamless. So linking that up is very important. You could have done a system and you say we are doing self-service, but then maybe that works for a particular class of people, but it doesn't work for others. It's like going to the market for people over the weekend. It is not convenience or inconvenience that sends them. It is actually therapy. Whenever they go to that market, there are people who believe that I don't buy matoke from a supermarket. It has to be that market. And when I get there to catch up, the story continues, saloon and all that. Just imagine if you did mobile saloon and you go and do it at the convenience of the person's home. Other people will be like, no, I need to have that jazz. I need to hear that jazz in the saloon. So keeping that updated is probably one way to look at updating bridging that gap. It won't be bulletproof. Humans are still important, in my opinion, for insurance.
Thank you so much, Nicholas, for that. You had already mentioned that insurance is not bought, it's sold. So the human aspect will always be there in insurance. Thank you for the presentation. I think that's it at the moment. No more questions on AI, so we thank you for your time. We continue to thank you for staying with us up to this hour and making it an engaging session. Before we move on to the next speaker, maybe I'll request Gerin to respond to the question on marine cargo. The question was on the marine cargo insurance domestication. How practical is it being implemented? So maybe give us a brief background, the regulations, and on the marine insurance.
Okay, thank you, Olivia. Well, marine insurance is governed by the Insurance Act, CAP 191, under Section 8. clause under section 8.2. If you read it, you realize that it provides for all local risks to be insured by companies licensed in Uganda, and this includes imports. And it's also governed by the Marine Insurance Act, the Marine Insurance Act, CAP 192. It has since been revised. So you can see that the law is very rich when it comes to marine insurance. So it's practical in the sense that IRA has partnered with URA, and they launched the cargo marine insurance, and that was on 6th November 2024. So all cargo or imports have to go through that portal, and they have to pay for the platform. They have to go through the platform, and IRA licenses and implementation with IRA. So there's a partnership with URA and IRA, and exceptions are to marine insurance are the personal effects. So it is very practical, and it is ongoing right now.
Okay, thank you for the response, Karen. Before we move on to our next speaker, we have a few videos on insurance that we wanted to play for you. And so after these videos, then our next speaker will join us.
First, systems in our vehicle's engine that are continuously monitored are basically being checked anytime the engine is running. Some really common ones are engine timing concerns and misfire concerns. Those are monitored anytime the engine is running, and that's mostly because if something goes wrong with that, there can be catastrophic failure pretty quickly. Now, when it comes to non-continuous monitoring, our ECM or our engine computer, sometimes also called the PCM or powertrain control module, will run these tests when the conditions are right. For example, when your engine computer runs the catalytic converter test, it has to run that test when the catalytic converter is at the proper temperature. If it tried to run that test when the catalytic converter wasn't, it would fail. These are really how most things are monitored in your car. These can also be called two-trip monitors, as because generally it takes 2 failures before the check engine light will actually come on in your car. All right, so let's break down exactly what this check engine light means. If your check engine light comes on, it's not a big surprise that your car is telling you, hey, I got something, you need to take me in. But it doesn't really tell you much more than that. If your car is failure, it may not tell us exactly what happened. For example, a fault code might for the key 03000 character point to the area of information about the powertrain. Faults can also helpful to understand body, a lot of times when we see a new code, that's a manufacturer specific code, and that's one of the cases where only the dealership might have that. The second digit will tell you if it's generic, meaning the same on all cars, or manufacturer specific. The 0 indicates a generic code, and a 1 would indicate a manufacturer specific code. So in our 0 code, we know that we have a powertrain code, and then the next 0, so we know that this is a generic code that would apply to all cars. Now the third character is where it's interesting. It gives us the substance perfect. One is to manage
taking
the air
your car
and
to a
fuel
repair
system.
shop.
Two is an
Depending on
injector
the
system.
situation,
It can
your
also
insurer
be
might pay
fuel
them
or air
directly
system.
or transfer the
3,
money through
like
you.
our example, is
Accidents
engine
can be
misfires.
expensive.
4 is
You'll
emissions
want
control.
coverage to
The
protect you
catalytic
if one
converter
happens.
example I just mentioned,
That's what
that
auto
code
insurance
typically
will
would be a
do for you.
P0420, indicating that there's a problem with the catalytic converter. 5, we have
Safest
vehicle speed and
drivers can
idle
get into
control.
accidents.
6, computer and
So let's
output
make
circuits.
sure you're prepared in
7
case
and
one
8 are
happens.
both transmission.
If your
and
car
then
is
9 and
damaged,
0
here
are
are some
reserved
steps
for
you
the
can usually expect
SAE.
when filing a
SAE is the
claim.
Society of Automotive
First,
Engineering.
call the police
now,
for
these
help.
are the folks that
Then,
put
as
together
soon as you
basically
can,
all of
reach
these
out to your
standards
insurer
for the
and
automotive
provide them with
industry.
information
now, I've
about
given
the
you guys a
accident.
few different examples of
They'll be a
engine
helpful
faults.
resource to
That
understanding your policy's
P0300 fault we
details
know
and
is a
answering
powertrain
any
fault
questions.
that is generic across
Next,
the
you'll want to
OBD2
confirm your
spectrum.
deductible, the
3
amount
is an
you'll pay
ignition
out of
problem.
pocket to
Now,
repair
the last
covered
2
damage.
digits are going to be the
Keep
identifiers.
in mind, once you
so
pay your
if this
deductible,
were a
your
4-cylinder
insurer
car
will
and
help
we had a
pay for car repairs up to the
P0300
coverage
and a
limit stated in your policy.
P0301, we would have a
And
cylinder
you might
1
want to see if
misfire.
your policy
If it was a
includes transportation expense
P0302, it would be
coverage,
cylinder 2,
which
and
helps
so
pay for
on.
any services
So what do we
that
do
you
when
use
our
while your
check
car
engine
is
light
being
comes
repaired
on?
due to a
Well,
covered
there's
claim,
3 basic
including a
states to the
rental
check
car.
engine light. There's the
You
check
could
engine
even
light
ask
is off.
them if there
That
are
means
time
everyone
limits
is
for
happy,
making
and that is
claims and
ideally
submitting bills.
what we want to have going on.
After your
We
questions
have
are
our
answered,
check engine
your
light where
insurer
it
will
is
assign
simply
a claims
illuminated.
adjuster to
That
investigate
means our
the
car
accident.
has a
They'll
problem,
also
and
determine
we
how
do
much
need to
the
get it
insurance
checked as
company will
soon as
pay
we
for
possibly
repairs.
can. We
Now,
also have
the
on
last
and
step will be
flashing.
taking your
This
car
points
to a
to
repair
an
shop,
engine
and
misfire.
depending on the
This
situation,
can be a
your
very
insurer
serious
might pay them
thing.
directly
We want to
or
make sure that
transfer
we're
the money
not
through
driving
you.
a vehicle with a
Accidents can
flashing
be
check engine
expensive.
light.
You'll
Can do
want
damage to
coverage
our
to protect
catalytic
you if one
converter.
happens.
Getting your car towed
That's
is
what
highly
auto
recommended
insurance will
if
do
it has
for
a
you.
flashing check engine light. All right, so what do we do when this check engine light comes on? Well, we have several options. We can take it
Even
to our local
safest
dealership and
drivers
have
can
them
get
do a
into
full
accidents.
diagnosis.
So let's
Dealerships
make
know
sure
cars
you're
very
prepared
well.
in
They know
case
their
one
brands
happens.
very well,
If
so
your
that's a
car is
great
damaged,
option.
here
There's
are
also
some
a
steps
ton
you
of
can
really
usually
great
expect when
independent shops
filing a
that
claim.
specialize in maybe the brand of
First,
your
call
car.
the
You
police
can
for
even
help.
take it there
Then, as soon as
for
you
a full
can, reach
diagnosis.
out to your insurer
There's also a
and
third
provide them
option,
with
and that's
information about
purchasing
the
our
accident.
own OBD2
They'll be a
scanner.
helpful resource
That
to
maybe
understanding
something
your
like this
policy's
OBD2
details
scanner,
and answering
you can
any
even use
questions.
something like your cell phone.
Next,
Pair the
you'll
two,
want to
and we
confirm
can
your
look at what's
deductible.
going on with our
We
own car.
apologize for
With
that.
each of these options
Seems
comes
to
some pros
be an
and
issue
some cons.
with
If we take
technology,
our
and,
car
and
somewhere
yet we're in
to
an
the
era of
dealership
technology.
or to an
So we
independent
apologize.
shop,
We shall
odds
share
are
the
we're going to be
videos.
charged a diagnostic
We
fee.
shall share
But
the
good thing
videos
is
when we are
they should have
sharing
all
the
information
slides.
and all the equipment to properly diagnose what's going on with your car's check engine light. Using our own OBD2 scanner like this one may save money on the diagnostic process, but we might not have all the repair and all the diagnostic
I think we are ready
information.
for our
We may
third
also lack
speaker.
the test equipment to properly pinpoint
Our next
exactly what's
speaker
going on
is
with
the
our car.
chairperson of the
Before you
Insurance
decide to
Appeals
DIY
Tribunal.
or not to DIY, I highly recommend you check out another video that I did called 7 Simple Car DIY Mistakes. That'll give you more information to help you decide, do you want to do a DIY, or is this something better left to the professionals?
Apologies for the technical glitches. We're ready for our third speaker. Our third speaker is Miss Rita Namachika. She's the chairperson of the Insurance Appeals Tribunal, and she oversees appeals received from the decisions made by the authority. So she'll be speaking on reshaping insurance dispute resolutions in a changing world, with a focus on the key decisions from the Insurance Appeals Tribunal. So we've heard about the key developments in the insurance industry, the emerging trends, AI, and now let's hear about dispute resolution from the appeals aspect. Allow me to welcome Ms. Rita. Ms. Rita, you're welcome.
Thank you so much. Thank you so much for that introduction and for giving me this opportunity to present about the Insurance Appeals Tribunal to members of the ULS. It's always a pleasure indeed to tell people about who we are. Is the presentation ready? All right. Okay. The topic for today, as ably presented by the MC, I was given to talk about reshaping insurance dispute resolution in a changing world, with a focus on decisions that are coming out of the Insurance Appeals Tribunal. But before I do that, I thought I should tell you more about the tribunal and what we do. Let's move to the next slide. Or how do I use this? All right. Okay. The Insurance Appeals Tribunal is basically part of the sweeping reforms that were taken by the insurance industry in 2017. So under these reforms, we saw the introduction of the Insurance Appeals Tribunal as a specialized and industry-focused dispute resolution mechanism. We are independent and impartial, and one of our key functions is to offer an accessible and efficient alternative to what is sometimes a lengthy court process. The overall objective of this really is to enhance trust and confidence in the insurance complaints management mechanism. About the composition of the tribunal members, we are 5 of us with vast professional qualifications and experience which are relevant to the insurance industry. For instance, one of us should be by law an associate of CII, which is the Chartered Insurance Certificate. One of the people on the panel must be an advocate, and we should also have a chartered accountant, and all this should have at least 15 years of respective experience and discipline. The tribunal by law is gender sensitive, and it's stipulated that at least 2 of the members of the tribunal must be women, and all members are appointed by the Ministry of Finance. The chairperson is appointed in consultation with the Judicial Service Commission, and she's qualified to be a judge of the High Court, as well as the registrar of the tribunal is also qualified to be a registrar of the High Court and appointed in consultation with the Judicial Service Commission. We conduct our business on an ad hoc basis. We are not full-time, we only meet as when there's business. To give a brief of our mandate, like I said, our jurisdiction is clearly stipulated in Section 137 of the Insurance Act, and we have appellant jurisdiction from decisions of the Insurance Regulatory Authority. So any person who is aggrieved by the decisions of the IRA may appeal to the tribunal within 30 days from the date of that decision. And what are our powers on appeal? We can uphold the decision of the IRA. We can reverse the decision of the authority. We can revoke or vary the decision of the authority, or we can remit it back to the authority for reconsideration with or without guidance. Just a brief, more detail on which are these appealable decisions. We do have decisions that are really regulatory and supervisory by the IRA. In our experience, these have been very, very few. There could be maybe investigation, suspension, revocation of licenses, directives, penalties. Those are some of the decisions that can be appealable. But the bulk of our work is client-facing, and these are really decisions that are out of disputes of policyholders and the insurers. These decisions downstream are handled by the Complaints Bureau, and so the policyholders or any party that is aggrieved by the decisions of the IRA Complaints Bureau can then appeal to us. So you can see that these that are client-facing will go a long way in improving public trust in insurance. So as we do our functions, the tribunal has powers to take evidence on oath. We've interfaced with many of you, and you're familiar with this process. It's not different from court. So we take evidence on oath. We can proceed in the absence of a party who has had reasonable notice of the proceedings and doesn't turn up. We proceed ex parte. We can adjourn the proceedings. We can also make an order as to costs, which shall be enforceable, like an order of the High Court. We can re-examine witnesses, cross-examine those who are in and outside Uganda. Yeah, so the processes are very familiar with court processes. Though under Section 129, we borrow from the civil procedure rules at our discretion. So sometimes we have lawyers coming and they want us to strictly, they want the tribunal to strictly apply court processes and procedures. Those are at our discretion. What we are interested in is really quick adjudication of the matter as the tribunal. So what are the important timelines to observe in the process of appeal? Like I said, a person aggrieved by the decision of the authority must bring his or her appeal to the tribunal within 30 days. We've had instances where appeals are brought after 30 days, and I'll talk more about that as we get along. So it is strict compliance with that requirement, and after we receive the appeal, we shall schedule a date for the hearing, and we must give the decision within 90 days from the date of filing the appeal. And a party that is aggrieved by the decision of the tribunal may, within 30 days from the date of delivering this decision, appeal to the High Court. We clearly state that at the end of our decisions to remind our users of their right to appeal to the High Court. I'll quickly go through what are the key processes and procedures at the tribunal. How do you file an appeal? Members of the ULS, we do have the Insurance Appeals Tribunal Regulations 2019. They are very, very elaborate on the process of filing and lodging an appeal. I would encourage you to kindly get familiar with them. But briefly, under Regulation 10, there's a prescribed form, which is AIT1. You must use that form to file your appeal, and it will guide you on how you can state the reasons of the appeal and everything else, all the requirements. There's a small fee that is payable, very, very affordable in the first schedule of the regulations. And the regulations again stipulate modes of service and responses and hearing notice, and also what happens when you don't appear. So members of the ULS kindly get the regulations. On hearing, we do have oral hearings, and we have both parties present with their witnesses. We take evidence de novo. We've tried to align as much as possible to the court hearing processes. We have a joint scheduling memorandum where the parties are agreeing on the facts and issues. We do have also filing of witness statements and written submissions. Our hearing notice stipulates most of these requirements. The tribunal members also have a right to cross-examine, because we've had some of you appearing, and when we give the opportunity to the tribunal members to cross-examine, some lawyers get offended. But why are you cross-examining? It is a right that is clearly stipulated in the regulations. A party may appear in person or may be represented by counsel. We also adjourn, but given the fact that we have only 90 days within which to hear this matter and also give a decision, we are generally not accommodative of adjournments. We've had challenges in that area with councils appearing and sending people to hold brief. And these people sometimes get shocked when we tell them, please proceed. Because you realize that from the time of filing proceedings, we lose about close to 35 days just in exchange. And then we have to hear this matter and also write a decision within 90 days. We do give written decisions, and these decisions, we upload them on our website and on ULI. We also have case digests where we just try to summarize our decisions. So kindly get on ULI. I think when you Google for some of these cases, you'll find them, and also on our website. Our decisions are binding on the parties, unless, of course, they are appealed against to the High Court. We've been in existence since really fully operational since 2022 to now, and we have so far received and handled 56 appeals, and we've seen an uplift. 2025 has seen an uplift in the number of appeals, with 25 appeals so far lodged. We have concluded 45 of them, and these decisions have been delivered, while 11 are at various stages of being heard. The subject matters of the appeals is as diverse as the insurance products in the industry. But of course, it's still early days, but we have tried really to analyze the trends, and we are picking out that the top three in terms of subject matter, we have the group life, disputes surrounding that product, motor comprehensive, and medical insurance. These are really coming out as the top three disputes. So that is it about the tribunal. If you want more information, Our website is fully operational. Kindly log on, or you can pay us a visit. We are always ready to receive you and tell you more about the tribunal. Now I'll quickly go through the topic that I was given, which is how the tribunal is reshaping the dispute resolution landscape. The tribunal, as I have hinted, is really focused on addressing issues of public trust and building confidence, because one thing I think that this industry suffers most is lack of trust. Every time you tell people about insurance, they will say insurers are thieves, insurers don't pay claims, and you'll find that generally there could be some negativity around insurance. And you'll be surprised that insurers actually do pay claims. But there will be those disputes, of course, that will arise. So the evolving landscape obviously includes demands for transparency and faster claims handling. Yeah? And this really calls for adjustments to legal principles and issues like alternative dispute resolution, which I believe is where we sit as the Insurance Appeals Tribunal, just basically to offer a quick dispute resolution, a quick dispute resolution mechanism, and really reduce on as an alternative to the expensive and time-consuming litigation. As practitioners, we know ultimately how much time these disputes can take in the courts of law. So yeah, we offer that alternative, working of course in this dispute resolution mechanism. We have the IRA Complaints Bureau, whose decisions we review on appeal. The next point, like I said, it's really enhancing consumer rights and disclosure. The tribunal is working to ensure that policyholders receive the improved disclosure and that their rights are better protected. And this will lead into more trust and confidence in the insurance sector. So I do believe that is our key role in the dispute resolution, because by the time a dispute arises between the insurer and the policyholder many at times may feel that the insurer is being unfair to them. So it's very important that there's a mechanism that provides them an opportunity to be heard. And I must commend the framers of this law that sort of really defining the dispute resolution mechanism. There are not many. We are not many insurance appeals tribunals in Africa, and it gives us pride that we are playing this part. And then how then is the tribunal reshaping the dispute resolution landscape? Like I said, one of the ways is direct influence on insurers. Through our pronouncements and decisions, the tribunal is directly influencing insurers to adopt more customer-friendly policies and procedures. At the end of each year, we do compile our decisions and recommendations, and we engage, we share with the regulator, and through this, we believe that there will be more regulatory oversight and enhancement, or just the regulator finding ways and guidelines on closing some of these gaps that are really affecting the policyholders. Secondly, by setting a standard for fair play, we emphasize issues like clear communication and simplified policies that will help establish a higher standard for fair practice within the insurance sector. I'll give you more specific examples when we go to the kind of decisions that we've handled. Yeah, that's one way in which we are contributing in reshaping the dispute resolution landscape. But most importantly, we are creating a more accessible dispute resolution system. Like I said, for instance, the fees that are payable are very, very affordable, not cumbersome to our users. We try as much as possible to give timely decisions within 90 days. This way we are making dispute resolution more practical to the aggrieved parties. So now going more in detail on the decisions that are coming out of the Insurance Appeals Tribunal. What are we seeing in these 56 appeals that we have so far handled? We have seen a growing need for simplified and transparent policies. We've handled issues where the policies are just ambiguous. You have a policy document, for instance, stipulating a benefit as a benefit, but then the other clauses that follow, it's an exclusion. And this, of course, goes into things of interpretation, of course, the contra pro fatem principle being interpreted against the drafters. We are spending a lot of time seeing this kind of vague policies, policies that even the insurers sometimes cannot interpret themselves. The terms are just unclear. The claims process is vague within the policy. And I think we as lawyers, especially the lawyers interested in insurance law practice, there's work for us here. We're encouraging our users to just see that these policies are reviewed, simplified, clarified. Insurance companies now should be doing some policy audits. As per legal requirement, these policies, of course, are approved by the IRA, and some were approved maybe some time back. There should be, because the environment is changing, practice is changing, insurance itself as a practice area is changing. So we need to have policy audits, policy reviews, clarifying policies and simplifying them for the end user, so that we reduce on the disputes that are happening. I must say that about 70% of the cases we've handled, there are issues to do with policy interpretation. The other issue that we have seen is, again, a vague and lengthy claims process. For instance, we do have claims guidelines. The IRA has guidelines which stipulate timelines, but that's timelines for claims payment. But where a dispute is involved, there are no timelines. So an insurer can investigate a claim even for 2 years, 2 to 3 years. And this, you can imagine how it erodes public confidence and just fuels the grievances. So some of these delays, there are policies even that stipulate claims support to the insured, which is not given by some insurers, which can amount to bad faith also. And you have lawyers coming and really interpreting, because at that point, it's a dispute, and they are strictly interpreting these clauses against either for their client, the insurer who has the policy, and to IRA. We've had a challenge that sometimes the policies are not given maybe to the insured, and the lawyer is arguing, is it a contract? Did the insured, the policyholder, accept this policy? Because the insurer gave them maybe a policy that was already signed. So some of this feedback we are sharing with the regulator, at least to make sure that if a policy is issued, there is some consensus, really basics of the law of contract. Was there a consensus on this contract? Because the policyholder also have never seen this policy, I didn't receive it, and there's no contract. But again, they want to rely on it during the dispute, so they cherry pick when it is in their favor or not. So so the vague claims handling process is one thing that we have come out strongly in our decision and in our decisions that we have so far given, and try to streamline that area as well. In the decisions that we've handled also, you'll find that we uphold strictly the fundamental principles of insurance law, like utmost good faith. Like I said, poor claims handling can infer a lack of utmost good faith. We've had issues of insurable interest. We've had issues of non-disclosure of material facts by uninsured, and these, of course, we are subject to interpretation of fundamentals of insurance, principles of insurance law. We've had issues of disclosure and transparency in the cases we've handled, where you find that the insurer is just not even communicating very, very clearly the policy terms or a claims process. We had a case where the insurer communicated via email that the claim was payable, but then after, I think they read the policy and said, no, this is an exclusion. After the insured had gone through the process of getting all the requirements together based on the email, so then the legal dispute becomes, does the email supersede the policy requirement? Because the policy is clearly excluding the benefit, but there's an email that has communicated acceptance of this. So some of these things of just poor communication fueling like legal disputes. We've made pronunciations on those. We've also had issues where the role of the intermediaries, these are the agents, the brokers, bank assurance of recent, where we have made pronunciations that the insurer is still liable for actions of the agent. We had a case where the bank gave, it's called the key facts document, which should be like a proposal form, communicating benefits that are different from the policy itself. So which one supersedes the other? Which one is the contract? And the client relied on that key features document to claim. And then the bank is like, the insurer is like, no, the bank is the one which gave that, we were not aware. But the insurer is the underwriter of the policy. What are the insurer's obligations in terms of ensuring that the end user gets the right information about the policy? Yeah. So we've had such issues, and we have made a pronunciation. Of course, the standard in that regard should be higher in terms of liability. We have also, in terms of regulatory compliance, the tribunal has directed, we have sometimes directed the regulator to actually take action against non-complying insurers. Yeah. We have also enforced application of compliance with the Insurance Act. For instance, we had a case where premium was not paid, and the policyholder had a policy, but they hadn't paid premium. And we said, no, this is a regulatory requirement under Section 63 of the Act that you have to pay, and then it's a cash and carry principle, basically. So in that way, we have enhanced regulatory compliance. But most importantly, also at the tribunal, we've addressed jurisdiction and timeliness. Like I said, you must strictly apply, appeal within 30 days, which sometimes makes the legal practitioners very unhappy, and then you'll have obviously applications, miscellaneous applications for reinstatement and enlargement of time, and yeah, so we really are strict on time because it's a statutory requirement, and in this way we just emphasize the importance of following the proper procedure steps within the prescribed time frame. Some of you who have appeared before us get even quite upset when we request for submissions to be made within 6 to 7 days or 3 days, just because we do not have time, and maybe we have lost time in adjournments and just small mishaps that happen. Yeah, so members of the ULS, kindly be aware. In our findings also, we have noted just lack of technical expertise, especially in the areas of investigation and loss adjustments. For the lawyers, you may find that you're relying on a loss assessor's report, but the loss assessor's report lacks the photographic evidence. It is not conclusive, and this is the key document that will determine whether or not this claim is payable. And as legal advisors, again, there's an opportunity here for us to work with the insurance companies as lawyers to help them refine their reporting and align it just to the key tenets of evidence. Will this pass as evidence and support our claim if we appear before the tribunal or the complaints bureau for that matter? Of course, loss assessors and investigators are regulated by the IRA, and we have given feedback on the technical gaps, because this is another area, again, which is really fueling the insurance disputes. What are the key takeaways from what I have said? Like I have said, it's early days. We have only done that number of cases, unlike our colleagues downstream who are handling much more, but we believe we'll get there. 56, we have managed to pick those key trends. The key takeaways from this, you'll see that the recent findings or focus of the Insurance Appeals Tribunal and its decisions, there's a wide shift in the insurance industry towards more efficient, transparent, and fair dispute resolutions. And this include, number one, a push for simplified, transparent policies and faster claims handling. As legal practitioners, Let us please support our clients. Like I said, do policy audits, do policy revisions, do look at the claims handling process. Where are the bottlenecks? Sometimes even a claim is not disputed, but it just takes long to be paid. Please, let's guide our clients in terms of these processes as lawyers, so that by the time you appear before the tribunal or the complaints bureau, these areas are refined, because there's no reason why you, as a lawyer, will have a policy that is contradictory in nature and you insist on it because you know the principle or the rules on interpretation of documents. Like I said, the Insurance Appeals Tribunal uphold the fundamental principles of insurance law. Those who are familiar with these: utmost good faith, insurable interest, please get familiar with these. Some of you will appear and you're arguing out the insurance policy. You know, insurance law is interesting. For instance, that a warrant is the major term of the insurance contract and not a condition. And the interpretation that is made by the lawyers who are not familiar sometimes is the other way around, that it was a condition and not a warrant. So kindly get familiar with these principles. There are 5 of them, and they really govern the insurance contract, and we strictly uphold them. Then there's establishment of a clear procedure and rules of the tribunal. Like I said, we are strict on timelines of appeals to us, and also delivery of judgment. This is meant to ensure fairness and efficiency in the dispute resolution process. We want you to come within 90 days. You have moved on to the next step. Either the claim is paid or you have appealed. Yeah, some of our decisions have been appealed, and that is okay. Yeah, so we want to take that decision in a very, very timely manner, and we enable you move on to the next step. But most importantly, we are emphasizing, there's a great emphasis on insurer accountability, making sure that they are complying with their policy terms and conditions, and where there is ambiguity, these will be interpreted against them. We are also emphasizing in our rulings proper handling of disclosure issues and claims handling. And for you, the lawyers, please, like I said, get on the website, read our regulations on our processes and procedures, so that by the time you appear before the tribunal, you're not caught off guard. There is a lawyer who appeared before us and said they hadn't filed a reply to the appeal, and he said, for me, I wasn't aware. And we asked them, then what are you doing here? Because as a lawyer, the basic is that if there's an appeal, you have to put in a response. And we are like, did you read our tribunal processes and procedures? He hadn't read. And you can imagine at that point we are really constrained to adjourn, because then how do you proceed? You proceed ex parte. He has appeared, by the way. Some of you appear, one of them said, for me, it's my clerk who served this thing. I don't know whether it was served or not. All sorts of things, and we tend to be very strict. Sometimes we even dismiss, and you find an appeal against the dismissal on matters of policy and procedures. I would encourage all of you. Insurance is a very interesting practice area for us who have done it. I'm sure in the morning you were told the opportunities in insurance. Kindly take time to understand insurance law and regulations. You should stay updated with the insurance laws and regulations because it's ever evolving. Things are changing. We are now talking about AI and technology affecting insurance, and this, of course, will go into the disputes that we handle. So that means you have to really be on top of the game. So kindly go back. We have an insurance training college. Go and get the basics of technical insurance practice. Then lawyers, you need also to communicate clearly with the clients and insurers to resolve the disputes. We've seen many times that the lawyers are fueling the dispute on technical issues, matters that, and when they come, we are like, yeah, we are not really that technical. We just want to get to the bottom of the dispute. Put it on record. We are like, it's okay. We shall put it on record as the tribunal. So as I conclude from the presentation above, the Insurance Appeals Tribunal is evolving just beyond simple dispute resolutions, technicalities, and stuff like that, to become a key driver of more transparent and customer-centric insurance industry. We are advocating for clearer policies. We are, through our decisions, like I said, claims handling, more technical capacity building of the people who are involved in the insurance industry ecosystem. Those you will find even in our orbiter of our decisions and to the recommendations made to the IRA. Our focus is that a more transparent and customer-centric insurance industries. Our decisions are setting precedents that mandate clearer policy language, fairer claims handling, and strict adherence to legal and procedural standards. I thank you for the opportunity to present to the IRA and to the listeners. That's our contact. We are found at that Rumi Towers. Please visit our website, give us a call in case you're not familiar with the processes. We have a full secretariat headed by a registrar. You'll get help that you need in respect to our processes and procedures. Thank you so much for listening to me.
Oh, wow. Thank you so much, Rita, for that presentation. Thank you for also taking off your time. We appreciate all the lawyers who are still with us up to this time. Because we're running out of time, we're going to take at least 3 questions. And Rita, thank you for taking us through how the IAT operates. You know, in the Complaints Bureau, usually people don't come with lawyers. But when they decide to appeal, that's when they engage lawyers. That's when they engage lawyers. So it's important for lawyers to know how the tribunal operates. Please interest yourself, visit their website. Like Rita had mentioned, get familiar with the process, stay up to date with the insurance laws. It's very important. All those, the laws and the regulations are on our website. Because we're out of time, let's go quickly. Rita, there's a question for you. Do you consider the appeal to the Insurance Appeals Tribunal from a decision of IRA a judicial appeal, considering that the tribunal takes fresh evidence? Let her answer this, and then we shall answer a few more questions before we close.
I beg your pardon.
Do you consider the appeal to the Insurance Appeals Tribunal from a decision of IRA as a judicial appeal, considering that the tribunal takes fresh evidence?
Okay. To answer you, I believe by judicial appeal, you mean our normal appeal, like court of appeal process, because we get this question all the time. Why are you taking fresh evidence? They come with grounds of appeal, and here we are dealing at the tribunal. We are dealing with issues and not grounds of appeal. So in that sense, it's not a judicial appeal because we are taking evidence de novo, and that's the structure. If you look at our regulations, we take evidence on oath, we examine witnesses, we have witness statements. In that regard, it's not a judicial appeal because we are a quasi-judicial body. So we take evidence afresh, and by the time now you move to the next step, which is the High Court, which I believe will be the last court of appeal in the insurance appeal process. That's then the judicial appeal. That's why our decisions are appealed to the High Court. Yeah.
Thank you, Rita. I think that has been clarified. I also wanted to highlight, you mentioned the appealable decisions. I'm glad that you mentioned, because I don't think a lot of people are aware that you can also appeal the supervisory decisions made by RA. For example, if an approval is rejected of a merger, or appointment of a key control function director is rejected by IRA, you can appeal to the IAT, and it's a completely independent body from the authorities. So be sure of justice. So we have very many questions, but we are nearing the end of the session, so I'll pick out the ones that I can. This one says, thank you so much, Chairperson IAT, for this great discussion. The tribunal being the appellant body for IRA complaint decisions. Kindly clarify on the Complaints Bureau specific institutional nature. Is it designed to function as a quasi-judicial body with powers of determination, or does it primarily serve a mediation and conciliation role? For example, as the Labor Office and Industrial Court. Furthermore, are the decisions or determinations of the Bureau and Tribunal legally binding on the parties, and can they be executed or enforced through standard legal process? So this is a combination of questions towards the Bureau and IIT, but I think you can take it up.
Okay. I'll attempt. For the Complaints Bureau, in my understanding, this is a regulatory mediation mechanism as part of the dispute resolution. So the regulator has to pronounce itself on some of these issues from really a technical but also regulatory oversight in my view. But I'm sure someone from the Complaints Bureau can also add on that. But that's my interpretation, because then the Insurance Appeals Tribunal comes in as the quasi-judicial body to handle the complaint. And our decisions executed and enforceable, I did mention that. Yes, they are. They are enforced. They are binding, first of all, unless appealed. Yeah, so once we give that decision, it's binding unless you appeal to the Court of Appeal. And yes, it's executed just like a decision of court. And we've had 1 or 2 executions in that regard, yeah.
Thank you, Rita. Just to talk about the Bureau, under Section 11, the Insurance Act, the authority has a mandate to resolve insurance-related complaints. It has power to arbitrate and grant restitutions to complaints, and that's how the Bureau operates. So our decisions are binding on the parties to the complaint. So it's an ADR mechanism, not only mediation and conciliation. I hope that answers the question. We have another question here, but this is to the Complaints Bureau. Have you handled complaints against bank assurance agents, e.g. banks, and does IRA have jurisdiction over policy disputes involving coverage where the bank is the agent and the policyholder was not covered due to negligence of the bank? Yes, we've handled complaints before. We handle all complaints by licensees, against licensees, and bank assurance agents are licensed by the authority. So we have jurisdiction over them and we handle those complaints. Does the cash and carry principle apply to a policy holder where the bank promised to renew policy and did not happen? The cash and carry principle applies to everyone. And if the bank promised and didn't renew, that's now another issue, but the cash and carry principle applies to everyone. Rita, there's a question here directed to you. You talked of that decision involving a mismatch between a key facts document issued by the bank and the policy issued by the insurance company. Since a key facts document is or should be a summary of the main contract policy, how did you conclude regarding the same matter since the bank is representing the insurance company?
We found that the key facts document was the contract, so it didn't matter that it was in contravention because it should have been aligned. And our finding, this is one of our latest decisions that we gave, I think, last week. So we found the bank and insurer liable. Yeah.
Okay, thank you.
Maybe just to add to that, in our obiter, we did observe that the insurer should make sure that the bank is issuing correct documents. Yeah, it's one of their key role. They cannot give the policy because there's an argument that our policies with the bank, we don't interface with the client, but the policy is the basis of the key facts document. So you have to make sure that it's aligned because it's the basis of indemnifying the client. So where there is a contradiction, obviously, it has to be interpreted against the insurer.
Yeah, that's true. Just two questions before we close. There's one on the pecuniary jurisdiction of the IRA Complaints Bureau. Like we had mentioned earlier, we're guided by the Complaints Bureau guidelines. Everything is in there, but we have unlimited jurisdiction over insurance complaints as mandated by the Insurance Act. And our proceedings before the IRA Complaints Bureau confidential? Yes, they are. And when we give them to IAT, when we give the proceedings to IAT, it's just for their information, but they are not used during the proceedings. And as you can see in our case digest, we omitted names of the parties. We only left the names of the insurance companies, not the policy holders, for confidentiality. Since we are out of time, I'm going to invite our manager, regulation, drafting and compliance, to give her closing remarks. Once again, I want to appreciate everyone who is with us till this moment. Thank you for your time. So allow me to welcome Ms. Ethel Mulondo to give her closing remarks.
Thank you so much, Olivia. I must say that as the authority, we are so elated. We have had consistent attendance from the beginning. That shows that the discussion was timely. Everyone was interested. The engagement is exceptional. We do appreciate that, and we do not take that for granted. I know this has been a very, very rich discussion. We have talked about the developments in the industry, the trends, the IAT, how it operates, and also the opportunities that are therein for our lawyers. I do interest all the lawyers to interest yourselves in the insurance industry. There is a lot of benefit that comes with that. Just like Rita said, please go to the Insurance Training Institute. There is also the Chartered Insurance Institute of UK. You're going to get a wealth of knowledge on insurance, and you never stop bettering yourself in this field and any other field, but for this field particularly. I think Mr. Lutakome spoke to the AI, and now we know that insurance is here to stay, even in the wake of AI.
There is so much that we can still leverage in there. The opportunities are immense. I do thank all our participants, all the panelists, everyone who has been on this call. Please, when we do schedule another insurance training, join in, interest your colleagues to join in, because there is a lot you're going to learn. Every day you learn something new from someone. So I do not want to take more over the time of other participants. Allow me end this training with a quote from Peter Drucker. Peter Drucker is an American consultant and an educationalist. He said that knowledge has to be improved, it has to be challenged, or it vanishes. So those are the words I would leave with you today. Thank you so much for attending the conference. We are grateful.
Thank you, Itho. And thank you. As we conclude, I want to thank our speakers today. Thank you so much, Rita, for sparing your time to come for this training. Thank you, Garin. I also want to appreciate ULS. Thank you for giving us this opportunity. And it's been a very productive session. We've had good engagements, and we're hoping that more lawyers can get interested in insurance. The opportunities are so many for us lawyers. And yeah, we are waiting for you to, we're waiting for you. Rita has been in the industry for almost 20 years and she's thriving. So there's so many opportunities for lawyers. You're about to retire, so you okay. Yeah, thank you so much. We've reached the end of our session.